A very good evening to all present here. At the outset, may I request everyone to come to attention for ICAI motto, please.
Yaesha supteshu jagrati. Yaesha supteshu jagrati. Kamam 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 pursho nirmimanaha tadeva shukram tadbrahma tasmin lokaha shatah sarve tadunatyati kaschan etadvaita
Thank you. On behalf of the Western India Regional Council of the Institute of Chartered Accountants of India, I take great pleasure in welcoming all of you to this virtual banking conclave for 2022. We have with us Shri Rajneesh, Karnatak, Executive Director, Union Bank of India, our keynote speaker for the conclave, CA Manish Gaviaji, Chairman WRC, CS Jayesh Kala Sir, Treasurer WRC, CA Murtuza Kachwala, Regional Council Member, CA Ketan Sayya, and also CA Dhami Kenya and CA Rajesh Shah, who are the coordinators for today's program. And I welcome all of you. We live in very interesting times these days. Pandemic has forced all of us to change not only the way we live, the way we work, but also has also led us to question a lot of presumptions and beliefs that we have held about ourselves, our careers, our goals. But this moment of retrospection is not limited to humanity itself. World over, businesses are also retrospecting and thinking of how the future would lie, how they should change. The pandemic is already seen as a watershed in the evolution of banking. There are a number of trends that are reshaping the banking industry. I believe that COVID-19 has caused banks to be more proactive and also question their long-held beliefs. This has also led the banking industry to become more adaptive and innovative. Some of the top emerging trends which are likely to affect the banking industry include emergence of instant payment platforms, adoption of AI-based processes, digital currencies, emergence of fintech and pure tech players as competitors. And in this banking conclave for 2022, we have tried to design topics which would generate robust discussions on these trends and the issues that are likely to emerge for the banking industry, and also provide our members an insight into the likely opportunities as chartered accountants in the coming future in this banking industry. May I now request Jayesh Kala, Treasurer WRC and Chairman of the Banking and Finance Committee of WRC, to give his opening remarks. Jayesh bhai.
Thank you, Rahul. Thank you, Rahul bhai. Thank you, Rahul bhai. Am I audible?
Yes, sir.
Yeah,
Jayesh
thank
bhai,
you,
you're audible.
Rahul bhai. Thank you, Rahul bhai. Respected Rajneesh ji, Executive Director, Union Bank of India. Respected Charanjit sir, CFO, State Bank of India. Manish bhai, Chairman WRC. Ketan Sayya, Rahul bhai, RCM elect. Murtuza bhai, my colleague in Regional Council. Rajesh bhai, Dharmi, coordinators for this program. This has been wonderful day on the banking conclave, wherein we'll hear the stalwarts from banking industry. Nobody can deny the role of the banks vis-a-vis the COVID-19 pandemic was concerned. I can say it was only and only because of the efforts of the banking the various steps taken by Reserve Bank of India and followed by all the banks have averted a major disaster which would have been done if the steps at the right direction was not taken. All credit goes to Reserve Bank of India and the two stalwarts sitting over here, Charanjit ji and Rajneesh ji. And I'm sure that the way in which uh, the changes are being done in the entire industry, banks are also going to adopt the new norms, the new technological changes that are being done. So with this, we have a wonderful session on this banking conclave, and I'm sure all the participants present over here will have a lot of value addition through this program. I myself, Jayesh Kala, thank you for giving this opportunity. Thank you very much. Over to you, Rahul Bhai.
Thank you, Jayesh bhai. May I now request CA Manish Gadia ji, Chairman WRC, to deliver his address. Manish ji.
Thank you, Rahul bhai. Rajneesh, Karnatak, Executive Director, Union Bank of India, and today's keynote speaker, CA Charanjit Attra ji, CFO of SBI. My regional council colleague Jayesh Kala, Murtuja bhai, and other coordinators. So it's really a great pleasure that we are coming out with the banking conclave. We used to have this conclave generally in a physical mode, but looking at the scenario, we decided to have this on a virtual mode. And I'm thankful to all the faculties who have agreed to address this program. And I thank especially Jayesh bhai, the chairman of Banking and Financial Committee, for working on this conclave, especially Rahul Parikh and Ketan Sayya also worked very hard on this conclave. So really great. The topic also selected is really good. And the topic what Charanjit Attra ji is going to take up, that is what is the expectation of bankers from the chartered accountant, is really, as a chartered accountant, we need to introspect ourselves and we need to understand what are the expectation of client. So definitely this topic will throw more light, and whatever topic we have selected this year is also a good topic. You can see a panel discussion today is the next gen banking, that is looking into future of retail banking, then next gen banking innovations, and in lending and credit appraisal, that is what we are looking for. So really a great conclave. I will not take much time, so thank you very much. Over to you, Rahul bhai.
Thank you, Manish bhai. So moving on, may I now request CA Dharmi Kenya to introduce our keynote speaker for today, Shri Rajneesh Karnatak. Dharmi.
Thank you, Rahul bhai. Good evening, all. Myself, CA Dharmi Kenya, hereby introduce our today's speaker, CA Shri Rajneesh Karnatak sir, who is a Chief General Manager of Punjab National Bank, posted at the corporate office. He is a postgraduate in Commerce, MCom, and is certified associate from Indian Institute of Bankers, CAIIB, with over very rich experience of 27 years in banking. He has carried offices and looked after various branch and administrative functions of banks. As a general manager in erstwhile Oriental Bank of Commerce, he has headed large corporate credit branches and various verticals in credit monitoring, digital banking, mid-corporate credit, etc. Post amalgamation of Oriental Bank of Commerce with Punjab National Bank, he has also headed Credit Review and Monitoring Division and Corporate Credit Division in Punjab National Bank. Shri Karnatak sir has attended various training and leadership development programs from IIM Kozhikode and JNIBD Hyderabad, and has also taken part in advanced management program at IMI, International Management Institute, Delhi, and IIPF. He was a first among the batch of the officers to be selected by the bank's board bureau for leadership development program of IIM Bangalore and Egon Zehender. He carries with him a rich exposure in credit appraisal skills, including project financing and working capital funding, along with risk management with specific reference to credit risk. He has also served as a nominee director on behalf of Punjab National Bank in the board of PNB Housing Limited and India SME Asset Restructuring Company Limited. With this brief introduction, let us join together to introduce our today's speaker, Shri Rajneesh Karnatak sir. Thank you, sir.
Sarvi sir is Executive Director
Thank you,
currently
Karnatak.
and holding a very, very important position in Union Bank of India that you missed.
Yes, so just one
Yes, sir.
minor change, right? So, sir is currently, he
Oh,
was
sorry,
chief,
sir.
he is now the Executive Director, Union Bank of India. Welcome, sir.
Yeah.
May I now request Shri Rajneesh Karnatak to kindly deliver his keynote address for this conclave. Sir, the floor is yours. Sir, you are on mute, please.
Can you hear me now?
Yes, sir. Absolutely fine.
Yeah.
Yes, sir.
Good evening, ladies and gentlemen. It gives me great pleasure to be here today in this conclave. It is my privilege, and I thank the Institute for inviting me for this and to be the keynote address here in this banking conclave, which has been organized by WIRC of ICAI. My gratitude to Chairman CA Manish Gadia ji, then CA Jayesh Kala ji, CA Dharmi Kenya ji, CA Dhriv Sangoi ji, CA Ketan Sayya ji, who has been in contact with me in the last couple of days for organizing, while organizing all these things, CA Murtaza Kanchwala ji, CA Rahul Parikh ji, CA Rajesh Shah ji, and my co-panelist Charanjit Attra ji, a dear friend of mine who's presently CFO with State Bank of India. Good evening, Charanjit ji, if you are hearing me.
Very good evening, sir. It's a pleasure hearing you, sir, on this. Please.
Same here, Charanjit ji. So it's a very excellent topic, I would say, virtual banking conclave. So this is very much apt, I would say, in this present world, wherein everything is going into the virtual and the meta space, rather, I would say, to take it much further. And the topics which I see over here are also very good, like the opportunities for the expectation from chartered accountants by the banking industry. That is another great thing. Then threat and opportunity for the banking industry in terms of the emergence of fintech. Then the startup funding cycle. Then there is a panel discussion on NexGen banking, innovations in lending and credit appraisal, monitoring through digital technology. All of which topics are, I think, very much relevant and contemporary to the times in which we are. To begin with, I would just like to take all the people present over here into the little bit of journey of banking before we get into the future, what's happening around. So banking in India started in 1717 with a bank called the Bank of Hindustan when it was established. Then it was followed by three presidency banks by the East India Company, which were Bank of Bengal in 1809, then Bank of Bombay in 1840, and Bank of Madras at that time in 1843. Finally, all these three banks were merged into one single bank in 1921, which was called the Imperial Bank of India. And then this Imperial Bank of India further consolidated into what we call today the State Bank of India. And with the independence, and now that we are in the 75th year of independence, during the journey of banking since that time and since the independence, the next paradigm shift which happened in banking was in 1969, when the government of India decided to nationalize some of the large banks, which were around 14 in number at that time, into nationalized banks to serve the social and economic purpose of that time, because we being a socialist country. Subsequently, in 1980, again another round of nationalization took place in 1980, wherein certain more banks were converted into nationalized banks. And then the next paradigm shift came in 1991 with the liberalization of the economy and all the crises which India went through, when the liberalization of the economy also brought in the liberalization into the banking system, wherein in 1993, 10 more licenses were issued, out of which 6 banks of that time are still operational as on date. Then in the licensing policy of 2001, 2 more licenses were issued. And in 2013, another 2 bank licenses were issued by Reserve Bank of India, which is the regulator. At present, we are in the next phase of banking, wherein as per the present RBI guidelines, the banking license are on tap, which means that any person who applies for a banking license to RBI and if they are able to satisfy the criteria of the RBI, the regulator, they are given the banking license. In between, there were a lot of stress and challenges wherein certain banks which had failed both in the public sector and the private sector space got merged and amalgamated, like the New Bank of India. Then there was Global Trust Bank, and then apart from that, there were big amalgamation also during this journey of the banking system, wherein State Bank of India and its associated got merged into SBI. Bank of Baroda had an amalgamation with two small banks. Then another in 1st April 2020, 4 nationalized bank got amalgamated, and few of the small banks got amalgamated into Punjab National Bank, Union Bank of India, Canara Bank, and Indian Bank. And in between, there were other crises of the NBFC sector also, like the ILFS crisis were there, DHFL crisis was there, and also presently what we are facing in one big NBFC is the Sarai, wherein another crisis is there, and the resolution is trying to be worked out. And with this brick and mortar banking over the years, the presently what we are having is that we are having small finance bank also in the country, which are also playing an important role and starting to play an important role. Apart from that, there are payment banks in India also, for which the licenses have been given. And then there have been a lot of technological developments in India, especially since 2011, which have happened, where there has been a lot of mechanization, there has been a lot of automation, I would say. Then there is a lot of internet which has come into the banking for the customers and all the vendors. And then there is the mobile banking, which is the last phase which we are into at present, which we are featuring. During the mechanization phase, there was Miker introduced, Miker check recognition was introduced. That was in 1990s, early 1990s, rather 1980. In 1990s, there was a lot of ATM were there, electronic fund transfers also started, branch connectivity also started in the year then 2000. Then lot of RTGS, NEFT, all these kinds of payment systems, online, IMPS, all of them started in the technology space. And then finally in the year 2000, I would say 2011 onwards, this biometric, mobile banking, check truncation, UPI, open banking, and blockchain, biometrics, cloud computing, chat box, all this also has started. And all these along with UPI and other things are transforming the way we are doing banking today. And now moving forward, there are a lot of fintechs also in the country which are coming and who are getting into the technology drive as far as the banking is concerned, which will be another paradigm shift in my view. I will delve upon it as I move forward in my deliberation. Among all this, we should not lose hindsight on the disruption which has taken place, what I would say over the years, last 20-30 years into the banking portfolio and the porthold which was there. So if we see, there has been a lot of earlier the significant share of the market in banking was held by the public sector banks, and now there has been a paradigm shift over the last, I would say, 15 years, wherein a lot of business share has shifted to the private banks and foreign banks. To just give you a data from the Reserve Bank of India side, the market share in credit as on 2004-2005 in public sector banks was 73%, which has in 2020-21 numbers as per RBI has come down to 58% only. There has been a fall of 15% in market share in credit for the public sector banks. As far as the private sector banks are concerned, the growth has been phenomenal. From 19% the share they were holding in credit in 2004 and 5, it has gone up to 36%, which is an increase of 17%. So basically what we see, if we analyze the numbers, the share which has gone out of the public sector banks has clearly moved and shifted towards the private sector banks. And the foreign banks which were holding around 6% in 2004 and 5, they have come down to around 4% only, and they have also lost 2% share, these foreign banks. Similarly, as since the credit part has shifted over the years in the banking market share, similarly the deposit part has also shifted. The public sector banks which were holding 77% at one time in the deposit share, market share, have come down in 2020-21 to only 65%. There has been a fall of 10% in the deposit share also. Similarly, for private banks, it has gone up from 17% to 28%. So significantly, the private banks are doing well. And obviously, the one thing which I can summarize why they have been doing well, apart from other factors, one significant factor is the technology. The private sector banks, when they came into India, whether it was ICICI Bank, the big private sector banks, HDFC Bank, Axis Bank, Kotak Mahindra Bank, Indus Banks, which are the leading private sector banks, I would say today, they had no legacy issues per se, and they went straight away into the technology. They started the bank with the technology, which the public sector banks, they were all in the manual procedures. We were into the ledger system. We were into the manual system. To shift from the manual system and with the mindset of the public sector staff to come into technology and digital was a big changeover, which took time to happen. And during this time, the private sector banks definitely have caught up with their technology, with their efficiency, with their average age of staff also. So what we see typically in presently is the average age of staff in the public sector bank is quite higher when we compare to the average age of staff in a private sector bank. So that another thing which gives them the lead. Another thing is that public sector banks expect the customer to come to them. The branch is open, they expect the client will walk into them. The banking has changed today. So what is happening today is the private sector banks are reaching out to the customers. They are going to the customer rather than the customer coming to them. Clients do not have time. It is a buyer's market. It is not a seller's market. We have to understand today. So being a buyer's market, a customer has a choice today to go to a bank, whether he wants to get a liability product, he wants to keep a deposit. So he's a choice of plethora of public sector banks. Then he has a choice of private sector banks. He has a choice of small finance banks, foreign banks. Similarly, with kind of loans also. When he wants to take a credit, he has a choice to go to a public sector bank, private sector bank. So these are the paradigm shifts which have happened over the years and which is now going into the virtual banking side, wherein even the physical coming of the client or we going to the client is not required. Everything is online. You have to go to the site of the bank, log in over there, put up your application. It is a straight through process in most of the banks, in most of the PSU banks also while giving the loan. Straight through process. If I speak of my bank, Union Bank of India, presently we are having a straight through process up to 5 crore. So up to a 5 CR loan, it goes through a straight through process. So the client has to punch in certain information and data, and our analytic system at the back end works around it, and then it throws up whether the sanction is there or not. If yes, so what amount, and the rate of interest also a matrix is there. So the sanction letter is pushed to the client. So this is how where the banking is moving today. So the more the objectivity is there in that, the more the amount will increase slowly and steadily. The more data is there with the banking system. So this is how the banking is moving at present. And just to give you a number, what we are having today is, so 15 today as on date in India, 1 lakh of population is having 15 branches as compared to 30 branches in USA and Japan. So in a way, there is huge scope as far as this is required. And as far as internet banking and mobile banking is there, the pickup has been great as far as India is concerned. Though there are only presently 100 transactions per 1,000 adults in India, in compared to 15,000 and close to 3,000 in Brazil and China. Not to speak of USA and Europe, which are much higher. So these are the things where the technology is coming into the banking system. Things are evolving. Another paradigm shift is happening in the banking structure, and the entire architecture of banking is shifting. And lot of things is system driven, analytics driven, data driven. And what has helped in this pandemic is since 2020, which has come, since thankfully the country was into the digital mode, banking was into the digital and the system mode, it has helped a lot during the pandemic, wherein the digital technology in the banking system has come to fore as far as helping the clients and completing the banking, whether it is on the retail side or on the asset side, whether you want to keep your deposit, make certain payments, or you want to take a loan on any kind of thing. And then if you see the way forward, presently what we are doing in banking and the way forward is where I see in the next 5 year banking goes is, apart from the technology and other things, there is a huge scope as far as the banking is concerned. If you see the data and the aspiration of the government, where the country would like to go in the 2025, it is being said that we would like to be a 5 trillion economy, and the government is working towards that, and the Reserve Bank of India and other government institutions are also working for that. and the economy is also going robust. Corporates are also in tune to that for making the country into a 5 trillion economy by 2025. That translates to the present exchange rate at around 375 trillion rupees. So as on date, to give you just a ballpark number, our present GDP as on January 21 is $3.1 trillion, which translates to around 230 trillion rupees. So there is a gap of nearly 145 trillion rupees still, which we have to achieve by 2025 March. And with this pandemic happening, and if we say a growth of say 7 to 8% in the GDP and the rupee remaining stable, and with the inflation also remaining stable at this level only, we should be able to achieve by maybe by not March 25, but with these numbers to keep other things constant, by March 26 we will be able to achieve this 5 trillion economy with a 7 to 8% of CAGR. So as per the RBI data is concerned, just to give a number where I am coming to is that as per the RBI numbers, the scheduled cooperative commercial banks presently as on January 22 have a credit exposure of 114 trillion rupees. So which is around 50% of the GDP, of the present GDP. So if the credit, if we have to go to a 5 trillion economy in March 25 or say March 26, we will be growing to a number which is around 375 trillion rupees, which is 375 lakh crore. So the credit gap which is there, assuming that the credit grows at only 50% of the GDP, though this number in developing economies and the developed economy is near to 100. So the credit in other countries which are the developed countries or which are more developed than India, maybe China, they are nearing to 100. So, but we are assuming only a 50% credit to GDP, what we are having present on a conservative level. The gap is still 72 lakh trillion dollars. So the credit growth in the banking system would be 72 lakh trillion rupees. That is a huge number, considering the fact that in the 75 years since independence, we have reached only 114 lakh crore. And to achieve this 72 lakh crore in the say next 4 to 5 years will be a big task. But definitely if the economy continues to grow at the 7 to 8% CAGR GDP growth rate, we will definitely be growing at to the 5 trillion and the credit growth will be also coming to that level. And to give you another number in perspective, to have a credit growth of say 72 lakh trillion rupees in number, in value terms, the capital required as per present RBI guidelines at a 9% credit of CAGR would be around say 6.5 lakh crores of capital is required. So that is a huge capital for all the scheduled commercial banks to have in the next 4 to 5 years, to have that much of growth capital to achieve a number of 72 lakh crores in the next 4 to 5 years. And it will be coming in a combination. I clearly see from the growth capital would be coming from the profitability over the next 4 or 5 years. The banks would be showing, number one. Number two, there will be a lot of capital raise from the market through tier 1, tier 2 equity capital. And also number three, there would be lot of what I would say value addition, which would be happening through the capital market and other things, through which the capital will have to be raised by the banks to achieve this number of phenomenal credit growth which will going to happen. So these are the basic things which are there as far as the numbers are concerned. So since the banking conclave is there, and I would like to take this opportunity, then since all the chartered accountants, financial analysts are there, and you are the people in the system and in the country who understand finance, who understand credit and how it flows and how it is conceptualized, arrived, appraised, all these kinds of things. So as far as the assessment of credit limits is concerned, this has also moved over the years in the journey of banking from say last 40 years, from the Tandon and Chore committee, which had said that there is a first method of lending wherein the current ratio is 1.33, to the second method of lending wherein the current ratio was 1.17, to then it evolved to a better level, which was the second method, wherein for the large companies it said that the current ratio should be at least 1.33 so that the margin is achieved. And then In between, there was a PJ Nayak committee also set up by the government of India, wherein they said that the current ratio achieving by the small MSME and the small corporates will be difficult. So PJ Nayak committee came out with this turnover method, wherein for limits, small limits, turnover method was defined, wherein 25% would typically be the assessed turnovers, working capital requirement, 20% will be funded by the bank, 5% will be funded by the promoter himself. So these are the things through which it has evolved. And then finally it came to the present, which is the cash flow based funding. Now over the years in the journey of financing, with lot of stress, NPAs, which we all have seen in the banking system, among all the financial, not I would say the banks only, but all the entire financial institutions, intermediaries, wherein NBFCs are there, financial institutions are there, wherein other shadow banks are there. So what we see is even the working capital finance thing is also not working properly. Finally, the thing which has now coming in, rather than going into asset based financing, we are going towards a system which is cash flow based financing, which is more technical, which is more fundamental, I would say. So banks are now going for a cash flow funding, wherein they are trying to fund only the deficit. They are trying to ask the borrower, what is your deficit? And if the promoter contribution is there for the deficit, remaining funds is being given by the bank. So that is another thing which is evolving now. Some banks have already started with deficit financing kind of funding. And in fact, it has matured and evolved as far as the EPC contractor funding is concerned, wherein the EPC contractor cash flows are taken month on month basis, and the deficit is only funded by the bank within a line of credit which is given to them. So this is one way. And then with this cash flow funding, with this straight through processing which is coming, with GST funding through straight line process, and then this invoice funding, this is all cash flow funding in a way. State Bank of India, I believe, and some of the private banks are also trying to evolve. We in our Union Bank of India are also trying to evolve certain products through which have stabilized and matured into cash flow based funding. But it has still long way to go. These are the first initial steps, I would say, as far as cash flow funding is concerned, because otherwise primarily we are still into the old age first method and second method of lending. So within which, what I would say that over the years what has evolved is that IBC has also evolved over the years as far as this our journey is concerned. That as you are aware that lot of banks went into the PCA, there was lot of stress. Private banks, there was also a lot of stress. PSU banks went into PCA. Presently there is only one bank which is into PCA among all the nationalized banks. And recently RBI has come out with the guidelines. They are trying to be more stringent on NBFCs now, both the housing finance companies wherein the regulator is now RBI, and other NBFCs wherein now where they have specifically stated that NBFCs will also be coming under the PCA category. So the NBFC will also passing through the stage 1, stage 2, stage 3 of the PCA category. So this would be happening, to my understanding, as on 31st March 22 balance sheet. So RBI will be now monitoring the balance sheet of NBFCs, audited balance sheet of 31st March 22, and the PCA categorization would be happening post 1st October 22. So this is another paradigm shift which would be happening. And with these all NPAs happening in the entire banking space, the NPA space and the bad asset space also evolved over the years with this journey. Just to take a couple of minutes on that, to give an overview of all the persons present over here, ladies and gentlemen, that not much was there in 1994. If you see, the NPA norms were nearly 180 days. From 1 year it came down to 180 days, and finally what we are having today is the 90 days NPA norm for classification of income recognition and asset classification guidelines. In between there was very slow recovery, not much was happening. All the cases had to be filed toward the civil suit in the district courts, or you have to go to the High Court or the Supreme Court if the borrower used to go to the higher courts. So government came out with specifically what was happening is with the DRT. So debt recovery tribunals were made in the 90s, so that there is a special court in every district wherein the matters pertaining to NPA accounts and their legal things could be sorted out, and the fast track could be held out in the DRTs. But finally what was realized by the government and the Reserve Bank of India, that DRTs were also burdened with work, and they also could not cope up with the kind of numbers of the litigations which were happening pan India. with the kind of population and the NPA which was happening all around. So then the government came out with the SARFAESI Act. SARFAESI Act was one wherein the banks and financial institutions, earlier NBFCs were not part of that. Now NBFCs are also part of SARFAESI, that the asset could be taken over by the bank physically or symbolically and put to auction, and there could not be have any stay on the SARFAESI. So no High Court also could, the present guidelines of the Supreme Court is even as High Court cannot give a stay on the SARFAESI action being taken by the bank if the asset is properly charged in favor of the bank. So bank can go for a 13-2, after that 13-4, and then the auction can be dealt. But over the years, what the government felt and what the lenders and RBI felt, that SARFAESI also not serving the purpose, because there were a lot of litigations happening in between, and the sale of properties were not happening because of all issues all around in our ecosystem. And then came in 2016 the IBC. Then that was another thing which was taken out from the Western system, financial system, which was a successful model over there, the Insolvency and Bankruptcy Code. And then Insolvency and Bankruptcy Code has also had its challenges. So what I feel is that it is also going and maturing over the years. From 2016, we are in 2022, only 6 years have passed. And I feel that any act or any law which the country or the government passes, it takes anything between around 10 years to mature. So still 10 years is yet to happen for IBC. It is yet to mature, and it is evolving every day. So we see that every 2 or 3 times in a year, government is doing some modifications, coming out with different amendments in the IBC Act to fine tune it with the present regulations and the present issues which the all the stakeholders are facing. Just to give you a data, because there is a lot of misnomer whether IBC has been a successful or not, whether it is in the long term, will there be any efficacy of IBC or not. So there have been 421 corporate resolutions till September 21 through resolution, 1/3 of which were in deep stress of the 421. However, of the other way, if you see that for 1,419 corporate debtors have been taken for liquidation. So 421 were resolved through a resolution professional. So a resolution process was there, and 1,419 were taken to liquidation. Even though the fact is that the banks and even the government of India, the IBC, the act, the basic preamble is that if any account is taken to IBC through the CRP process, the intent is not to close that unit. The intent is to find a resolution. The resolution can be with the same borrower as it has been given in the pre-packaged insolvency for the MSMEs, or it can be a resolution through a new promoter coming in and giving a bid to the RP, and the new promoter taking place after the bidding process as per the guidelines. So this is the basic intent, that the unit is not to be closed, but a resolution has to be found. The CDs which have been rescued have had an asset value of 1.48 lakh crores, 421 which have been given with a resolution, which are the likes of which are in public domain: Bhushan Power, Bhushan Steel, Monet is there. Some big accounts have been there which have been referred and have been resolved. And the accounts which have been put under liquidation, which are 1,419, have a value of only 0.52 lakh crores, 50.52 lakh crores. So that is the impact. So 1.48 lakh has been resolved, and only 0.52 has been gone into the liquidation. So in value terms, 74% of the distressed asset have been rescued. So 3/4 have been rescued from, and only 1/3 have finally gone into the SIC of or have become refund. To give you another figure, the realizable value of these assets available within the 421 CDs rescued have entered, which have entered into the CRP, as I told you, is 1.48 lakh crore, and though they owed 7.94 lakh crore to the creditors, the resolution plans have realized 2.55 lakh crore. Against the value of 1.48 lakh crores, the resolution arrived for the lenders was 2.55 lakh crore, which is 172%. So there has been an upside of 72% over the liquidation value. So that is, from my side, if you see it positively, that is one positive thing in the resolution process, the CRP IBC process, which had happened. Though as per the debt is concerned, there has been a write down or a hit for the lenders, But as far as if you see what was the realizability value or the distress value of those assets was, there has been an upside of 72%. So presently around 18,000 applications are pending at various stages, and around 5,89,000 of amount is under which is under resolution. So another very important thing which I would like to say as a banker here is, with all my experience into credit and resolution, so primarily the job of the bank is to lend, right? When we take money from the depositors, the primary objective of any banking system, financial institution who is into taking deposit as per Reserve Bank of India is to lend money, because that is the only way we can sustain the financial system and pay our depositors with interest. So credit is the basic criteria for any financial intermediary to grow over the years. So what happens is that since it is a forum which is of chartered accountants or learned people who are into financial system and otherwise, so what I see typically is there are 4 broad categories of borrowers as we lend. So this will be one interesting thing which I would like to say is, from my own observation, among the other things in a credit proposal, whether it is a project appraisal, we give it to a project, whether we fund a manufacturing unit, whether we fund to infrastructure, whether it is trading and service sector. So it is there are 2 basic pillars into lending. Apart from the other things which are there, the 2 basic pillars are a good borrower and a good asset. So what is a good borrower? Good borrower which has 3 C's. He has the capacity to run the business, he has the capital to run the business, and he has the capability to run the business along with the integrity. So that is a good borrower. And what is a good asset? The money which is lent by the financial intermediary is used for creating a good asset, asset which has a value, number 1, and number 2, which gives a good cash flow to repay back the principal and the installment. So these are the basic 2 prime pillars, a good borrower and a good asset. So what happens typically is, in a banking system, or you can say a financial system which includes NBFCs, financial institutions, or even the fintechs which are coming presently, which are doing a straight through process kind of lending, is that if the borrower is good, right, and if the asset created is good out of that loan, there will be no issues for the bank, in the sense that there will be no stress, there will be no SMA categorization, and there is then no question of default. Very rarely that it will happen. So the default in such a situation will happen only if there are certain external factors which you may say the hand of God which may happen. Like sometimes earthquake comes and suddenly the unit gets demolished. If you have given a housing loan, it comes down, or there is a flood happening, or there is some calamity or a black swan event, like you can say a COVID type happening, wherein the entire country gets under lockdown or shut down, wherein certain accounts which were a good borrower and a good asset also came down under stress. So typically, normally a good borrower and a good asset will not come under a straight category, and such loans are normal paid back by in the banking systems. And you see many corporates in the country also, who are large corporates today, who have been surviving for the last 50, 70, 80 years, even before the country became independent, like Tata's and others, who have been able to survive because they have both the things with them, 2 primary things, good borrower and a good asset. So they do not typically give much of trouble to the lenders. So there is probability of default which is very less, and the loss given default is also very less. Even if the some default happens 1 or 2%, the LGD will be very less, the loss given default will be less. Now we come to the second category, where when we lend, the financial intermediary lend, what we sometimes happen is that we enter into, while lending, because of some judgmental issues or any other thing, a bad borrower and a good asset. The borrower was not good for whatever reason, because if the project cost increased or some event happened, material event happened during the installation of the project and other things, he could not bring in the required capital or other things more than the required, which was there at originally appraised, but the asset is good. So here the resolution comes. Here what banks do is, we come into restructuring, we go to all kinds of things. If the assets is very huge, sometimes we feel that the borrower will not be able to take it forward, we file for the CIRP also, we try to find a new buyer. So this is a combination where the lenders typically see that if a restructuring can help the borrower can sustain himself, existing borrower, because the asset is good, because the value of the asset is there, cash flow will also come once it comes on the track. So only thing is the borrower is bad presently, but sometimes we go such kind of asset to the NCLT. Sometimes there is another third scenario where the borrower is good but the asset is bad. So what happens is sometimes the asset has gone bad for various reasons. So here again there is a challenge for the lenders. The asset is bad in the sense that if it is a trading concern, the book debts are not getting realized. So the asset created is not giving any value. It has been wiped out. So if the borrower is good, he is having good integrity, capacity is there, and then banks again go for restructuring in such kind of borrower, or we go for a resolution process through a CRP or other things. But now the fourth category comes wherein both at the initial stage itself, the bank could not do the due diligence properly, and the borrower was not good, and the asset was also not good. So typically, if that kind of scenario happens, which is the fourth scenario, then that is a scenario where most of the accounts go for the litigation, or maybe the liquidation in CRP, because if the asset value is not there, debt is very high, so you do not are able to find any bidders also for such kind of assets. So broadly speaking, all the asset book of the bank, as far as the lending part is concerned, is categorized into these four buckets, if you can say. This is how it evolves over the years. So this is how the banking system has been and is there. And in between, what we see in the virtual world, which is happening, is that we are having these virtual banks. Then we are having these variable payments, which through a smartwatch you are able to have the payments. Then data and artificial intelligence is lot of there now. Blockchain is coming into the banking. Blockchain is coming into all kind of things, whether we are doing trade finance or any other things. Then cloud services are also being taken by the bank. So all these things are coming into the digital side. Another thing which I was told was just to give a quick glance was over the this which has come is with respect to the digital currency. So there was lot of talk and things about the digital currency. Finance Minister in her speech in this year's budget has already spoken about the CBDC, which is the central bank backed digital currency. So this will be a digital rupee which will be issued by the Reserve Bank of India. Though RBI has already been always cautious. Number one, the government has been cautious in giving any sense of what I would say that for the cryptocurrency, to give them a stamping of the government that cryptocurrency is there. Though in this budget they have said that any person dealing in cryptocurrency, any person who gains from the said asset class transaction would be having to give a 30% tax. However, RBI is still not very optimistic about it. I would say that they are trading very cautiously. The only thing that the government has given presently is a cyber currency, which the central bank will be issuing. So what will be this CBDC? CBDC will be like equal to the legal tender, like what we have today, the currency note, 2000 rupees, 500 rupees, 200, 120. So this kind of blockchain technology, most likely RBI will be coming, and we will be having the cyber digital currency, which will be issued by the government of India backed Reserve Bank of India. So what would be there is that in our digital wallet, we will be having this digital currency with us. So with this digital currency, if I go to a market and I need cash, maybe a time will come that I will go to a ATM, key it in the ATM that this much of a digital currency I am giving to the ATM, say 2000 digital currency, and the ATM will give me a cash of 2000 rupees. So it will be as equal to the cash. The best part with that would be that as it is a legal tender, currency note is a legal tender, this will also become a legal tender because it will be backed by the securities of Reserve Bank of India, gold and other paper securities, and it would be as good as a legal tender. So presently, to my knowledge, around 9 countries are having this digital currency which have been issued by the central banks, and many other European and Western banks and American central banks are also in the final stages of examining and issuing this kind of currency. So this will be another thing which will be a big paradigm shift. What it will do is that maybe with already the cash circulation in the country has come down with UPI, Paytm and all these wallets, and most of the people making payment through credit cards, debit cards, through UPI and other channels. But with this digital currency coming through Reserve Bank of India, the circulation, currency in circulation, I think will come down even further. Will come down even further because less currency will be required by us, cash with us, because just like we are having certain currency in our wallet, just like we are having some ATM, credit card, and other UPI and Paytm with our mobile, we will also be having with us our digital currency account through which also we can be making payment. So cash will be less dispensed with. The cost to the government, to the bank, for all other financial participants will definitely come down, because handling of cash is very costly, because printing of currency, handling of currency, and security of currency is very important. So then I think this will become another asset class for all the individuals in the country, where they can hold their income or the assets. So like what we have in our asset class, like we have a property, we have a gold, we have a fixed deposit, we have mutual funds, we have insurance, like we have bank FDs, we have a saving or a current account. So one thing, another thing would be there, the digital currency also would be in our wallet, in our asset book. So this is the primary thing which is there as far as the digital currency is there. To end, I would just, as far as the CA fraternity is concerned, so I would thank and acknowledge the great contribution of the CA fraternity as far as the financial system and the banking in particular is concerned. So I would just conclude in a couple of minutes. So CA fraternity has been a great boost as far as the banking fraternity is concerned, with all our central statutory auditors being chartered accountants. Then our concurrent audits are there, all kinds of audits are there, ASMs are there, stock audit is there, forensic audit is there, transaction audit is there. So basically we are dependent on chartered accountants as our primary source on which we rely on the certificates and every other things. And no audit or no banking system or no financial intermediation can go ahead without the audit of their accounts. And the audit of these accounts and high corporate governance, as far as audit is concerned, as far as banking and financial, because banking is a trust. It all depends on the trust, how people trust the financial system and the banking system. And audited balance sheet are one stamp of that trust. So these are the things. The contribution of chartered accountants is paramount, and I would thank the chartered accountant community for whatever they have done for the banking system and whatever they are doing. And the role of chartered accountants for me will continue till the system is there, because audits are bound to happen, audits will have to happen, and they should happen. And CA, chartered accountant firms and chartered accountancy, ICAI also evolving, lot of digitization is happening, lot of data is happening, so system driven data is there, so that there is less of manual intervention. Only thing that I would say here is, many times what we see when we do our trying to do the audit is we are trying to search for the needle in the haystack, and we ignore the elephant in the room. So that is one important thing, that if we see some elephant in the room, we should immediately point out that there is an elephant in the room, rather than we focus our attention towards searching the needle in the haystack. So that has also happened in the system, whether we are auditing the banks, we are auditing any corporate balance sheets or any other things. Many times we see that elephant is sitting over there, but still we ignore them. But that should not be done in my view. While searching for a needle, it is also important that we do not lose sight of the elephant in the room. So with these words, I thank you all for giving me this opportunity to address this August gathering, and listening to me with a patient hearing. Thank you so much.
Thank you very much, sir.
I
It was indeed an enlightening start to our banking conclave. I think we started off on the right note. You've given many insights into, you started from the history, and then we have received many insights into the future and what is the current scenario. So I would now request CA Dhirav Sangoi to kindly give a formal vote of thanks for this session.
I am looking very varied here today. Don't really there.
Good evening. See, Shri Rajneesh Karnatak, ED, Union Bank of India, just gave us a brief of the banking. He started with a different banking licenses that when licenses were issued, started with gave an insight of mergers of bank, also gave us an insight of crisis on the recent years which have taken place, and how the manual system of banking have shifted from to the technology based systems, and how the technology is developing and taking the banking forward. So he also said us that how the blockchain and the digital science is changing the banking world. He also gave us a good insights on the cryptocurrencies and the digital currencies which are going to come up. So I'd like to thank Shri Rajneesh Karnatak on behalf of the panel here. Thank you, sir.
Thank you, Dhirav. Friends, we now move on to our next session on opportunities and expectations from chartered accountants in the practice by the banking industry. And for this session, we have with us CA Charanjit Attra, Chief Financial Officer, CFO of State Bank of India. I would welcome him. And believe me, friends, you are in for a very, very informative. We had been discussing prior to the start of this conclave, and sir has some very interesting views, and I think we would all benefit from his experience and views on the matter. So taking the session forward, I now again request CA Dhirav Sangoi to kindly introduce our speaker for the session, CA Charanjit Attra.
Good evening, sir. Welcome you here. So CA Charanjit Attra, he is a member of the institute, and he's also a CPA holding a USA CPA degree from Denver, Colorado. He is currently a chief financial officer with SBI, and he also holds various. He's also into various committees of the institute, including the Expert Advisory Committee, Accounting Standard Boards, IFRS Implementation Committee, and the Internal Auditing Standards. So he is also currently the partner at EY Associates LLP, leading financial service practices for accounting advisory practice. And before EY, he was also executive director at 3i Infotech Limited, where he was also heading the global CFO and head of the US and MENA operations. He had also implemented IFRS cloud solutions with an objective to provide end-to-end solutions assisting companies to adopt Ind AS IFRS on cloud at 3i. Before 3i, he was also an executive vice president and CFO at ICAI Securities and general manager and chief accounting officer at ICICI Banking Limited. So he has various he has a vast experience. Okay, he has also been awarded as best CFO in the CFO 100 Roll of Honors for 3 years back to back, 10, 11, 11, 12, and 14, 15. And he was also included in League of Finance in areas of cost reduction and risk management, respectively. So, sir, we welcome you here, and we would like to have your knowledge and take the session forward.
Thank you so much, Nirav. And good evening to all of you. And I would like to thank the Institute for giving me this opportunity to speak on this topic. Earlier, I wanted to have a presentation on these topics, but I thought it's always better to have an heart-to-heart talk on what are the opportunities available for chartered accountants, both in industry as well as in practice with the banking industry, and what do we as chartered accountants need to do to avail these opportunities. As Mr. Karnatak, has beautifully laid down the entire history of banking till now, and you would have heard by now or that the banking industry has continuously been changing and changing for the better. The number of customers, number of transactions have continuously been increasing. The Institute of Chartered Accountants of India has been involved in entire step when banking has changed, whether as accounting making body or an institute working with the Reserve Bank of India on various accounting standards, or as members coming in auditing. So, I would uh, want to say that when we talk about opportunities with the banking industry today in the country, normally people start thinking about the traditional activities that we have been doing. So, I would, sort of look at the traditional activities in a moment, because that still continues. And when I mean traditional activities, which the firms have been doing up till now, include the concurrent audits, and there is an RBI requirement to get a significant branch audited by concurrent auditors, or a set of branches audited by concurrent auditors. And in most of the cases, the concurrent auditors are practicing CA firms, and it is sort of a routine work which is done by CA firms continuously. So that is one work. There are statutory audits which include branch audits as well as central audits which are done by firms, and which is a mandatory requirement under the Banking Regulation Act. The other works which the firms do relate to stock audits, tax audits, some sort of certifications. In fact, for certain medium as size and small size banks, there are firms also hired to do internal audit of this of the banks. And that itself is a mammoth exercise. There are some work on valuation which has been done continuously by the CA firms. And obviously, in some cases, some banks give what we call it as special audits of their borrowers to the firms. Now, these sort of practice carried on by the firms have been continuing, from the past, and still continues, and I'm very sure will continue. These are the audit plus attest functions, particularly, or the tax functions, particularly, which are being done. But as we move forward, and as I'm talking about, I have been about spent about 30 years in the banking industry, and practically equal number of years on both the sides. When I mean both the sides, as an auditor and a consultant, I would have spent 10 to 12 years, including my articles period, plus about 20 years on the other side, as a practicing, or working for a bank. So today, if I look at the banking industry and opportunities at the moment, as we are standing off, I think in a way, I want to just be positive and say that COVID is behind us. And in fact, even during COVID times, the work done by the institute continued, the work done by the member firms continued, banks were audited, reports were issued, and the results were out. So that was clearly a great effort put in by all of the all the members of the institute to ensure that the results of the banks were published to the stakeholders, and whether it included performing audits on a remote basis, or even traveling in some cases to the audit places. It was done by the members of the institute. But let me tell you, here it is very important to understand what does it have now? Has the uh, playing field changed, or has there been more increase in the scope? I would, leave this side aside to say audit and test work which is done by members of the firm. The new requirement or the new opportunities which is coming in the banks, it's clearly into there are opportunities for members who are in the industry, who want to do a job, who want to work for banks. There are opportunities for practicing members as well. Now, let me come to the opportunities which are there for chartered accountants who want to take a job or work with the banks. I think today a lot of banks, including public sector banks, are recruiting chartered accountants in their accounting teams, in their internal audit teams, in their risk management teams, and they have realized the importance of having chartered accountants in these firms. And you won't be surprised to see, there are so many advertisements coming out for recruitment of chartered accountants. And I would also like to mention here that the compensation paid to the employees are also decent and good. So that is and one career which chartered accountants can definitely work out in sort of applying for those jobs and getting it done. Even in the private sector, as we are talking about, the requirement for chartered accountants have been continuously increasing, and people want more and more chartered accountants to join in. And all my CFO colleagues or people who are heading finance in the banks would agree today the supply is much lesser than what demand we have. And, we are always in need of good people who would come and work for us. So that is one opportunity which is, always there. And I will come in a little bit to discuss, what we need to do, or what are the expectations from people really, where the banks want to recruit them on roles to perform various activities. Coming to the other side, what I said on members who are in practice, and what are the opportunities for them. I would like to say, there's one big area which, are performed only by very few select firms, which are larger firms today in the country. And sometimes it is so, and I'm more than surprised, I'm shocked to find out that, when we come out with a particular a requirement, there are only few firms who actually bid for that, because in case of public sector banks, we are required to follow an RFP process. And once we do that, there are only a few firms which have that capability, or which actually come and sort of bid for that. And those sort of activities which I'm talking about are in the advisory capacity, because the banks today, as they are growing, the growth is so fast. Not only audits, but they need a lot of advisory piece when they are implementing the systems and processes. So when I actually talk about advisory sort of a practice in the country, and what we need, I will actually put it into three categories. One is advisory in IT industry, which is very clearly on technology. Then we need IT advisories on various accounting pieces, what is happening with the advent of Ind AS, and a lot of circulars issued by Reserve Bank of India, the master directions issued by the Reserve Bank of India. There sometimes seems to be advice which we need from various firms on various aspects. We need advice on tax and TDS matters. Lately, after 2016, 17, GST is become a big area where we need advices and support from the firms to fulfill our requirements under GST. For example, a larger bank may have as much as 35, 36 registrations, and the returns have to be filed in that places. It's typically not possible for the banking staff at this point in time to file 36 registrations or across the places, and have expert people sitting in those 36 registrations. So in some cases, the bank will want to have the benefit of various accounting firms who are doing that to do that. The other part, last year, Reserve Bank of India made it mandatory for all public sector banks to implement internal controls on financial reporting. And that is one area which is coming up, and with the sort of length and breadth of banks spread across, there's a lot of inputs that we need from whatever the experience all these firms have to actually tell the banks on how they need to go ahead with it. They have done, I have been implementing internal controls for the last about 15, 20 years. And I think it's not one-time implementation, which is critical, but it is one-time implementation followed by a sort of series of changes that needs to be made, systems that to be tweaked, particularly in an industry which has, a lot of changes going on. Once the changes are going on, new products are being introduced. Mr. Rajneesh Karnatak just spoke about the sort of changes which have been brought about in the industry, and these changes, are going to happen in the future as well. As we are talking about, there is a draft master directions of the Reserve Bank of India, which we are all commenting on, which will change investment accounting, substantially. Plus, as we are talking, there are other changes sort of being implemented which we need to do. There are also advisory services in what we know as for raising capital, M&A, advisory practices, where we need a lot of consulting on whether we need to go for perpetual bonds, or we need to other sorts of tier one capital, what is available in the market, and if we do that, what are the compliance related issues that we may need to face. So that sort of preparation for that advisory. In fact, from next year for listed banks, there's going to be ESG reporting. So, on that, a lot of guidance is required. So, a lot of advisory services are coming up. And what I see today that very few firms, and I have no hesitation in saying very few firms in the country have a dedicated partner for providing this advisory services. So I think somewhere we may need to beef up, and the practicing firms will need to, sort of beef up to provide these services. Typically on technology related services, because any change, any system, any account, software which is implemented needs two things. One are technical experts who are going to sit and code the system, and on the other side there are functional experts who are going to tell you what is needed. And that is where accountants come in. That is where chartered accountants come in. And chartered accountants today, let me tell you that not because I'm a chartered accountant, but I think from a functional expertise perspective, are the best people who can implement technology. I think and after the technology is implemented, on the process of testing, you need a lot of support from firm, because whether the software or the tech or the product which has been implemented is delivering what needs to be delivered, or what it was and what it has been and it starts to be delivered, needs to be tested and audited internally to give comfort that the software is working properly. It's not the attest function which I'm talking about, but more of a comfort function which needs to be sort of given to the management to say yes, it has been implemented properly. Typically, if you see now in 2016 or 2019, if I'm not wrong, Reserve Bank of India had made it mandatory to implement, to make the entire MPA process automated. Again, the same thing when the banks went out on the market to say, what does automation mean? To what extent can it be automated? A lot of functional expertise were needed at that point in time. And again, I would like to make this point: very few firms today, had the capability or the intent to do that. I think so. That is something that is there in the future. It will always be there. Things will keep on changing. Blockchain is coming, digital currency is coming in. Again, once it gets implemented, you need functional experts to design what the system needs to do, then come back and test whether system is really doing what it was intending to do. So there's a lot of work coming up. There are also today work relating to fraud inspections, etc., which has increased tremendously and being outsourced. There are certain outsourcing of operations, allowable operations by RBI, which is being done, and some parts of reconciliation, etc., which can be outsourced provided it is allowed by the RBI. So that sort of thing is done. So in a nutshell, if I have to tell you that there are a lot of opportunities today coming in the banking sector, and it will continuously be there. However, while I'm speaking, I need to also mention this fact that as of now, this large chunk of work which is happening is being done by a very few number of firms, and I really don't know the reason. So we will all have to introspect and look at it into great depth on why these things are happening, why this sort of work is only being done by a small number of firms, whereas a large number of CA firms are still doing the traditional work of concurrent audits, statutory audits, or valuation, special audits, and all those stuff. A lot of taxation work sometimes done, but at some point in time, I believe our firms or people are or the members in practice will need to sort of look at that there are other areas of work. There are huge advisory sort of work which is coming in. I also understand there are certain foreign banks who have their captives in India, and they are all continuously look out for people. And and the recruitment can be of two types. One is when they directly recruit chartered accountants into the captive. And the third thing is they have consultants of various accounting firms from whom they hire people for a period of time. They don't need continuity, say for 6 months, 9 months, or maybe for a couple of years. And that is where that is again an opportunity which the firms need to size up and start preparing for that, because that is something particularly in the post COVID area, I believe is there to come, and that's going to be a huge opportunity for both the members in practice and members in industry, or members who want to actually work in the industry. So, to summarize, yes, I believe there are a lot of opportunities, and these opportunities will be there. It will be coming. It will be various types, and the firms and the members will need to build in those expertise. I think the institute is always helping, always there to bringing out new courses. I don't know really whether the members really use those uh, platforms or courses set up by the institute to gain that knowledge. So in a way, if I'm not wrong, we speak about it, but it's high time that now we as members of the institute start upgrading our skills and start upgrading ourselves to match with the requirements of tomorrow. Because if we don't do that, particularly there's one more thing which I want to be very clear on, and which I've been working on it from I don't know for the last 10 to 12 years, is the implementation of NDS. Now, Indies will open up huge sort of opportunities for all the members. We need to ensure that as a group of chartered accountants or as an institute, we have the requisite capability of implementing Indies. Now, Indies would also require technology changes. What I'm talking about, there will be accounting advisory, there will be technology changes, there will be technology advisory, and all those stuff which will then sort of again increase work. So we should start building up on this. I think what I don't see with many firms today in the country is expertise on technology. So we need to introspect and something. Do we have that ability? Do we have that capability of helping a bank implement technology? Have we ever started looking at that? Are we training our people on technology? Even for members who want to go into the industry, it will be very critical to know about technology. You may not be programmer. Nobody wants you to go and code there, but at least use the existing technology, understand the technology, and implement it for the betterment of the organization. So, understanding technology, understanding new standards, understanding what is happening on the internal controls framework across the country. We had COSO initially when we implemented internal controls. Even that framework has now improved. So, there are many changes which are happening, and we need to, have that changes. We need to find out ways on how we can help the clients. It's not the only traditional ways of audit and attest services. But let me also tell you, if you're doing audit and attest services, it may not be possible for you to do this advisory or non-audit services for the same client. But at least where you're not doing, audit and attest services, you may actually, look at this services which you can provide. I think uh, the institute as well as the member firms has played a great role in bringing banks where they are. They've always been there in the process to get banks where they are. But now is the right time to get into them and look at how we can take them to the next league of this automation or recovery or whatever we can do for the banks. I would now move on to my next part of my session is what are the expectations from chartered accountants from the banking industry. I think some of this I've already said when I have been speaking on these expectations. But I think two things, if I come from the members of the industry, the banking industry expects them to be really updated on the accounting standards and the taxation law. There are two things which are clearly expected because that is what something which a banker in a normal banking this thing doesn't apply or doesn't learn. Otherwise, a banker learns most of the accounting bits, most of the operation bits during his tenure in the bank. But when once it comes to this specialization, they would expect that if you're hiring a chartered accountant, the real expectation will be that the understanding of accounting standards, RBI guidelines, and also on the taxation front, whether it is direct tax or GST or whatever. So that sort of knowledge is expected when we are recruiting a chartered accountant. I also have to say that when we do give advertisements for getting chartered accountants with a particular experience, there is a lot of interest shown by a lot of members. But when they come for the interview, sometimes some of them, I think some of them are exceptionally good. I have to mention that, but some of them have really come to the interview unprepared, and that is where the name of the institute and the members sometimes we feel bad to say, is this what we get from the institute? So be well prepared, understand that you're being called for that post because you're supposed to have superior knowledge of accounting standards and taxation standards. So when you're applying for a job, when you're going for a job in a banking industry or any bank, please be well read and please understand. Otherwise, don't apply for those jobs. Otherwise, it won't be there. Coming back to the members of the industry, I think expectation from them is twofold. One is obviously superior quality of work, proper attention of work needs to be made. I think today what every bank would want to have if any work is given to them is a dedicated chartered accountant. When I mean a dedicated chartered accountant is either a full-time chartered accountant working with you or a partner who gives, and timeliness, the two important things which we look out from the chartered accountant, because we want any product, whether it is audit, attest services, or non-audit advisory services, to be delivered on time and with superior audit quality work. And that is where when things get delayed, when the quality is not good, it really harms not only the reputation of the firm, but also the reputation of the institute, also and the reputation of the bank just doing it, because nobody wants to get delayed work. So that is very, very critical that one needs to do, is on quality and this thing. The other thing which is expected from all of you guys, or all of the members in practice, when I mean all of you guys, is no last minute surprises. That is clearly a given. And what happens when I have faced this personally, both when I was earlier in the bank, that the reviews are done by junior people, maybe articles, semi-qualified, for some of the firms I'm talking about. The partner comes typically one day before the finalization and raises 5 issues which are not raised earlier, and that causes a lot of irritation with the management to say, why now? Why couldn't have been raised earlier? Because what happens is there is a lot of closing process, and people who are in the industry would understand that a lot of work goes in actually preparing the balance sheet till then. And if the issues come up at the last moment, it's again an irritating factor. The auditors think that the management doesn't want to accept it, but that is not the case. Accepting it would mean making a lot of changes, and sometimes what happens is all changes are not carried out, and then you end up doing some silly mistakes which then are very, very harmful to the organization. So very, very important to do is no last minute surprises. uh, that needs to be ensured by all the firms, and and obviously the quality of work needs to improve. uh, Dedicated people on the assignment given, that should also be ensured. So I think if I have to sum up what I have said in the last 35-40 minutes, is to say that one, there is a lot of opportunity for chartered accountants, both in the working in the industry as well as in practice within the banking industry. Two, we need to, the firms, and we need to uh, deliver quality work, and we should be able to show that yes, we are the best and we understand the accounting standards and all. Plus, we need to look at, I think today, what I feel is most of the firms, and I was talking about this to our respected chairman earlier, that most of the members in practice do not think that advisory work is work at all, and that and they could get in there. I think there is always a beginning, and I believe and I'm sure that some of the banks have taken the leap of faith and given work to medium-sized firms, Indian firms, to work on various advisory services, and that's a huge area coming up. It's not only the traditional services of audit and attest, which needs to be done, but a lot of new services which are coming in. And I would urge the institute to, take some measures, take some more training measures. Institute has, I believe, has done fantastically over the past, I think, 4 to 5 years on training, and particularly WIRC has been exceptional in, trying to get people to talk to everybody, people to sort of do series of accounting and all. But the question is, are the senior people really upgrading themselves? Are they trying to look at to say today I am going to leave the audit and attest practice to the qualifieds and look at, getting into advisory sort of services, into non-audit services. I think that shift is not happening. That shift of mind is not happening. We are more comfortable, and the firms are more comfortable in doing literally the audit and attest services and do not want to move. I think that once that shift happens, I think these all opportunities are available. Otherwise, things will happen that there'll be an 80 or not 80/20. I think 95/5 rule, where 95% of the work will be done by 5% of the firms, and the other firms, will still keep on gasping for work. So I would like to end my session here, and would like to thank the institute and all the members, the chairman, and everybody here for giving me this opportunity. Always happy to speak at this forum. So thank you very much, and over to you, sirs. If there is any questions which I can, I'm happy to do that.
Thank you, Charanjit sir. I am sure our members will have new insights into the vast opportunities which are available to us in the banking sector. And in turn, we should also be mindful of the expectations of the banking industry from us in terms of value addition. So I thank you for, it was indeed a great address. Thank you. I now request CA Murtuza Kachwala, Regional Council Member, to propose a formal vote of thanks for this session.
Thank you, Rahul. So, Charanjit ji, first, really grateful and thank you that you are always there for ICAI and especially for WIRC whenever we invite you. So, really, thank you. Thanks a lot. And I think quite well covered. So, in terms of you also clearly covered so many things, saying that there are so many opportunities for people to take up job within the banking industry and the whole of BFSI sector. But we need to upskill ourselves, train ourselves properly so that we fit into those various profiles which are available. And be it transformation, be it planning and reporting, or be it accounting, or be it whatever. But the most important thing, I think, for all of us who are into practice, and like you said, we'll have to invest in ourselves, train and upskill ourselves in terms of the automation, the digitalization which the banking industry wants. And you laid out so many things from ESG to IFR, internal financial control to X, Y, and Z. But the most important thing, I think, is like we should have one partner who's a consulting partner, and maybe especially only for banking, and who can focus, build those relationships, deliver that quality work. And I'm sure there is lots and lots to take home and do. So really, sir, extremely grateful and very well captured. And I'm sure members are going to benefit. Thanks a lot, sir. Thank you. And once again, I thank to CA Rajneesh Karnatak sir also for the keynote address. I think both the stalwarts really grateful. Thank you. So,
thank you, Murtuza bhai.
Yes.
Thank you, Murtuza bhai. So, friends, we now move to our next session, which is a panel discussion, and it deals with a very interesting topic. It's a very interesting or important facet of banking, retail banking, and it's a area which has evolved very rapidly, and we are still expecting dramatic changes in that area. As I think even Rajneesh sir said, and so the retail banking area of a bank has, it has changed beyond imagination in the last few years. And so we are going to have a panel discussion on the next gen banking, looking into the future of retail banking. That's our topic. And to moderate this session, we have with us next gen person, CA Anil Bhandari sir, Central Council member. And our panelists for today, we have CA Atul Bheda, former Central Council member and independent director of Yes Bank. CA Jinand Shah, managing director, online PSP loans. And Shri Pramod Kumar Gupta, general manager, retail assets, Union Bank of India. So I welcome all of you. I now request CM Murtuza Kachwala.
Rahul bhai, I have requested Rajneesh sir also to stay back. Sir is also there till 7 o'clock in the panel discussion.
Great, great. So I welcome Rajneesh sir also to this panel discussion. I think in a panel discussion, the more we have, the merrier. So it would always be very interesting to have sir's inputs into that. So now I request CA Murtuza Kajwala to kindly introduce our moderator and our eminent panel.
Thank you, Rahul. Before I get to the introductions, let me once again thank CA Ketan Sayya, CA Rahul Parekh for such a nice program which they have set up and with such good faculty. So really guys, great, and thank you very much. Now let me start the introduction with the moderator Anil, because he is going to be like the taskmaster and trying to extract from all the participants as much as possible for a value add. So, C. Anil Bhandari is a fellow chartered accountant, FCWA, CIA, CISA, and DISA. Anil is an inspired innovator, technologist, and thought leader in information risk management, fraud and forensic, and IT security. He has been the past president of the Institute of Internal Auditors India and is on the board of ICAI, India Growth Task Force. He is an elected Central Council member of ICAI, and therein he chairs the Digital Transformation Group, chairman of Internal Standards Board, and vice chair of the Financial Reporting Review Board. The Reserve Bank of India's Internal Audit Department as the lead assessor for the highly acclaimed Internal Audit Quality Assessment Review of IIA Inc. Further, he has also assisted the Inspection Department of RBI in its quest to implement the risk-based internal audit and enterprise risk function at RBI. He has been nominated by the ICAI on the working committee jointly with IRDA for establishing the best practices in controls for the investment risk management. He also played a thought leadership role in TRAI, SEBI, etc. He is also an ardent speaker. He can talk at length about innovation and technologies, particularly related to information technology. He is now an early investor in high growth technologies. As an investor and mentor, he works in tandem with an area of early stage technology companies which focus on mitigating new generation risk. So with that, I think let us welcome Anil to the panel. Let me
Thank
now
you, Murtuza.
Welcome. Let me now introduce all the three panelists one by one, and just give me a minute. I'll open the profile. So CA Atul Bheda, BCom LLB FCA DISA, practicing chartered accountant with degree in law and information systems audit. He's also done diploma in genealogy from Mumbai University. He's in practice since more than 35 years in the area of tax, audits, computer software development, finance, corporate laws, and various other professional assignments. Strong interpersonal skills and ability to get along with people. He enjoys challenges and always looks for creative solutions to problems. He has a very strong values and ethics and believes in strong relationships. Audit Committee Chairman of Yes Bank, Non-Executive Director appointed by Government of India at Yes Bank, member of Central Council of ICAI for the period 2007 to 2013, Chairman of WRC for the year 2001-2, and earlier he has been Chairman of various committees of ICAI, member of XBRL International Certification Board, founder director of XBRL Limited, and the list of associations at various organizations goes on. And he is also trustee of KVO Jain Maharaj, a 150-year-old NGO running schools, international schools, sanatorium, etc. So, and we've seen Atul Bhai very closely, and he is also available always for everything that ICAI and especially WRC needs. And in the social circle, I think he does a lot of social work as well. So, sir, thank you very much for all the effort that you do for the community. Thank you and welcome to the panel. Let me just go ahead and introduce the other two panelists. Shri Pramod Kumar Gupta ji, he is working as General Manager, Customer Relationship and Business Development Department, Central Office, Union Bank of India, Mumbai, since October 2021. Prior to assuming his current role, he was Field General Manager in Union Bank Zonal Office at Pune. He joined Erstwhile Corporation Bank as a clerk in 1985, and then he got elevated to such a big position. Mr. Gupta holds master's degree in commerce from St. John's College, Agra, and has qualified CAIIB in his early banking career. He's worked across operations, retail, MSME, credit monitoring, and he's been working as branch head and in various other profiles across the banking industry. Mr. Gupta has undergone various internal and external training programs by banks such as credit appraisal management, marketing for business growth, etc. He's been recognized for his sincerity, honesty, and smart work and dedicated service through various awards and recognition bestowed upon him from time to time. So again, a very, very senior personality, and let us welcome Mr. Pramod Gupta ji. Welcome, sir. Now, let me go on to also introduce Jinand. Just give me a minute. And Jinand Shah, qualification CA, India rank holder, CFA, USA, DISA, and certified international taxation valuation, forensic and treasury. 15 years of extensive experience across MSME, advisory, valuation, etc. Main founder, promoter of online PSB Loans Limited, and has been actively looking into automation and digitalization of banking sector and the financial industry. Responsible for vision and go-to-market and excellence in execution, looks after overall strategy and creation of complete functionality. He's got expertise in hands-on dealing with banks, SMEs, individual rating agencies, etc. And he always believes be positive, work with integrity, and never fear of anything. Nothing is so large that you can't achieve. So with that, let us also welcome Jinand. Jinand, welcome to the panel. Really got an expert panel, and I'm sure with Rajneesh also getting added and Anil putting in difficult questions and extracting, we're going to have a treat for us in the next 1.5 hours. Anil ji, over to you.
Thank you, Murtaza. Okay, I think there is a background noise. I'm not sure, Murtaza, is it coming? Just request. Yeah. Murtaza, could you?
मिश्रा जी एक बार सबको म्यूट कर देंगे मिश्रा जी?
हाँ जी, हाँ जी. And then one by one we can. Okay. Am I audible? Thank you. Perfect. So thank you so much, and fantastic and a very good evening. I think the keynote sessions were really interesting. Both the DGs, I had a glimpse of what you spoke, sir, and also Charanjit. I think he also kind of put in a lot of interesting stuff for chartered accountants. We always keep motivating chartered accountants. I think we should start opening up banks now rather than only auditing banks. But anyway, that's a different story. So having said that, I am waiting and eager to ask a lot of questions. Rajneesh, I probably wanted to start with you. And I wanted to ask you a very simple thing. Do banks make money at all? And if yes, where do they make their money from?
Yeah. Am I audible?
Yes, you're audible, sir.
Yeah.
You know, while we can talk about technology, all of that, I'm saying the fundamental business of banking. Does it even make money? And where do you really make your money from?
Yeah. So to answer your question, we do make money. That is why all banks are surviving over the years, not only in India, across the globe. And it's a very much viable business model. And that is why the equity valuations are also there. So the valuations is derived from the equity valuations, not only in India in the BSE, NSE, but also globally in across all the international and global banks. So it is a function of net interest income, the interest we earn from our loans, and the interest we give to our depositors, and the operative expenses that we have in between. So basically, if you see typically any financial intermediary, whether it is a bank, NBFC, financial institution, The most important line is the NIM. What is the NIM of the bank or the financial intermediary? So what is the NII, then what is the NIM? These are the key ratios, and after which they comes in the balance sheet, in the P&L head comes the operating profits. So these are the one things which are there. If the operating profit is coming, so where it goes after that. So the key is what is below the operating profit. So what happens typically for any financial institution which is into the lending system is that after the operating profit, we have to make certain provisions. If the provisions as per the regulator, the deemed provision as per the regulatory guidelines are more than the operating profit during a quarter, we show a loss. So this is as simple as that. So
No,
what
but
the
I understand that. My fundamental goal of asking was that I don't know, somewhere in my mind I always felt that banks really don't make money unless there's a good fee income coming in on the balance sheet. And during those years when you have a good fee income coming in, the valuations are really doing well. And my worry, Atulji, you're the chairman of the audit committee, so numbers go through you. Maybe let me ask you this question. I'm not sure if your bank is making money or not, but do banks make money? You're on mute, I think. Yeah.
Yeah, I was on mute. So first of all, Anil, a very relevant question. So first, I will talk in general. When you talk about businesses, businesses we talk about, gross profit is one of the very important component. So if I say whether bank is earning or not, I would go to very fundamentals. As Rajneesh ji said, interest is what we talk about. So all of us see, the average interest which the bank pays would be somewhere around 4 to 5%. I think that would be the average interest payment, and the average interest charged would be somewhere 8 to 9%. That would be the average interest charged. So a simple mathematical calculation is that I have a gross profit margin of nearly 50%. Now, if I am talking about gross profit margin of 50% plus what Anil you said about the fees part of it, so naturally, there is a very strong, trend that yes, banks do make profit, right? Now, in spite of all this, if you talk about such a huge profit margin, this is what is. I'm absolutely talking general knowledge. This is not at all, there which is a specialized knowledge, because everybody knows that what is the lending rate and what is that, what is the bank giving. So I'm absolutely talking about very fundamental things. And if 50% is a gross profit, how can somebody make losses? Yes, though many of the banks we see are making losses, maybe the various reasons could be maybe wrong lend, one of the major reason. NPA is one of the major problems with most of the banks. So that is how I feel that if the proper fund management is done, I don't think banks can make loss. You asked the specific questions whether your bank is making profit or not.
Well, that was only in a light
So
way.
I will just share about whatever things are there in public domain. I will not share anything which is not there in the public domain. So just a few days back we had quarter results out, which gave around 266 crore net profit. The quarter before that was 225 crore net profit. The quarter before that was 200 crore net profit. So this just to give you an example of the bank where I am concerned as an chairman of the audit committee. So yes, banks do make profit. Banks can make profit. Now that could be another reason why banks.
So having established the fact that we have a business model, and maybe we'll debate this a little later as well. Having established the fact that we have a business model, fee income was supposed to be one of the important constituents of this business model. And Rajneesh and Jinand, for example, maybe you may want to respond to this, but the fee income is eaten away by a lot of activities happening on the periphery of the banking system. Right? Banks didn't even realize that the payment systems would become so big, and they were too late to react to this, Jinand. So any views that you would have on that?
So, Anil, first for me, the question. Yeah.
Yes, please.
So first of all, good evening to all of you. Yeah. Good evening to all of you and all the esteemed dignitaries, very, very highly qualified and experienced people. So I'm working on the other side of banking, right? So on the fintech version, right? On the payment system, on the lending system, how those digitizations are happening. But if you look into the UPI, right? The UPI system has not taken away the banking from the banks. It has just added a layer over how the banking payments are happening today. So wallets had been there where some part of the float was taken away from the banks to the wallets, but that is now not the norm. The norm is UPI where the balances stay in the bank. Right? So in a way, banks have not been marginalized. It's the user experience where these all players have emerged as top runners as compared to the banks, and where banks have to emerge further and see how the user experience at banks also can be at par. But this all have enhanced that user experience. So banks have not become lesser in that case. It's just that someone has become bigger so far as the user experience and the frontage of the customer is concerned. So that's the change that we have seen in the payment ecosystem.
Yeah, so I think I'm not sure, but I'm sure I'm fairly sure that all of us here on this forum would have looked at the business models internationally, but one closer to home, typically the likes of Ant Financial getting very closer integrated with Alibaba payment systems, literally about to take over the banking system. Of course, nobody can take over the banking system, but largely driven by government and also protected to a large extent. But we did see a glimpse of a fact that all that a bank does conventionally, the banks have become Titanics, and it's become difficult for them to be agile enough to move fast. So I don't know, Rajneesh, do you have a view that what is it that I don't want to say that we were left behind, but what is it that the banks did not do or could not do to be able to quickly leverage on an opportunity which is so huge? Huge means really, really huge. So you think there are any key aspects or key learnings there?
Yeah, so you are right, Anilji, in saying and asking the questions. One, just I would like to respond globally. If you see banking, so the profit is normally made for any bank which is in a developed country. What they say is that the interest income, other than the interest income, should be more than the interest expenses. So if in a banking model the interest income other than the interest income is more than the interest expenses, so the model is very robust and it is more viable. So because all other interest expenses, non-interest expenses are taken care by the other income, which is all your fee-based income, process fee, checkbook charges and other charges. So that is one another way of seeing whether the business model is viable or not. And the other part rightly which was said was with respect to the margin which we have, the gross margin which we have. So the other part is taken care by that and the net profit comes out of that. So as far as the banking system per se in India is concerned, I would just like to, again at the cost of repetition, just say two lines, that as far as the private banks are concerned, they had taken a initial advantage. See, with the public sector banks coming into technology at a very later stage, all the private sector banks which came after 1991, whether it is ICICI Bank, HDFC Bank, Axis Bank, they all came with technology. They did not have any legacy of any manual banking. So they started with that. And the public sector banks were already on manual. There was a lot of resistance in the public sector space with as far as the workforce was concerned with respect to the technology. So that technology was again became a hindrance as far as to take it to the next leap and the next way forward was over the years before this digital banking and other things started. Apart from that, one critical factor which I would say for the public sector banks why they were left behind was the average age of the public sector banker was higher than the average age of a private sector banker. So what happened typically was the public sector bankers who were there, who got recruited in their 70s when the first nationalization happened, 80s when the second nationalization happened, they were not into IT, they were not into computerization, anything about that. So when the computerization came, they were laggards. Number one, it came late, and number two, when it came, they adopted it very slowly. The private sector, they came with young staff, they adopted it very fast, the technology. Just to give you a perspective, you will understand. See, Infosys is one of the biggest player as far as the CBS system is concerned in the banking system. So Infosys software is there in private sector also, in public sector domain also. The way private sector banks have leverage the Infosys and the CBS Finacle. PSU banks have not been able to do it. This is the underlying statement. So if they have a feature of say 500 features in their CBS platform, so public sector banks may have got leverage of only 100 such features. A private sector bank or a foreign bank has leverage within that platform, maybe 80% of those features. So this is one big differentiator why the PSU banks have lagged behind. So this is one reason, but I would say that there has been a
I think
gap.
fantastic. So I think, yeah, very neatly put through in terms of where we are. No, thank you so much, Rajneesh, for that. Pramodji, given the fact that we've established banking is a business, money is being made, payment systems, while we may be behind, we have an opportunity to catch up. You've gone through the ranks. Do you think the banks, the public sector banks, would have the ability to play the catch-up game and move ahead of the game? What is your view?
Okay, thank you, and good evening to all attending this session. Am I audible clearly? Because I'm sitting outside.
Yes, please.
I'm very
yes,
clear.
please.
Okay. So yes, definitely, because as our sir has told, public sector bank in digital banking, digital platform, we are a little late. If we could have started by 2005, so far as payment is concerned, digital payments are concerned, we could have made our ecosystem well in advance. So our position would have been better. But here I would like to tell you, sir, even though the digital platform, the public sector banks are not up to the mark, but we have our own good legacy systems. We can continue, but future is this: okay, without digital platform, digital payment system, we cannot move ahead, because the margin is very shrinking nowadays, and everybody wants collection and payments immediately. So, for example, I can tell about my bank. We are a very robust transaction banking system. We have collection and payment system here. We are providing the pricing to the customers, I think, best in the market. Even our products are being copied by the private sector banks also. And one more thing, sir, I would like to mention here. Now, although the margins are very thin for the public sector bank, now we have to change our business model completely. And as our executive top management, we all are now deciding to completely go with a fixed income type of lending rather than revenue-based lending or cash flow-based lending. So, this is from my side.
Fantastic. I was just about to ask this question, and I think you've put me on a very nice note that the question would have been while when we do look at lending, wholesale or retail lending, it's been primarily very conventional, right, in the way that we give it. For example, it's all backed with some assets or property or whatever. So maybe this question can be to Rajneesh first, or maybe if Rajesh is there from Yes Bank, he looks after retail lending. I don't know if he has a view on, is the model likely to change? And then maybe I'll take Rajneesh's view as well.
Sir, shall
Yeah, we are not able to hear you.
So Anilji, may I respond
Okay.
in the meantime?
Yes,
Since,
yes, please.
So yeah, you are right in your sense that is the model changing? Definitely it is changing from asset-based financing and from this traditional financing first method, second method of lending. We are definitely going into the cash model and straight through process financing. As like Union Bank has also done, up to 5 crores we are into straight financing, wherein through GST and through invoice financing and other data analytics and all, we are giving loans up to 5 crores. This is how it will pan out in the future also. So this is the future of banking. It would be cash flow based financing. It would be invoice based financing. And the more objectivity we can put into the lending, the more straight through process it will be. So this is my view.
Absolutely. I think you've really helped me to put this right on the nail. So now I have a follow-up question on technology. While I wanted to just try and understand myself and learn a little bit of banking model.
Yeah, Pramodji, you have
if you permit me, only one thing I would like
yes,
to tell you.
please.
So far as this lending is concerned, whether it's revenue based or cash flow based, public sector banks are lagging behind because they are not delivering on time and they are not targeting the area and that particular city and that where they require money. That is why NBFCs and private sector banks now, when I analyze it, they are reaching there where we are not able to reach it. Despite that, government is supporting, we have PSG and all that. So for that, we have to think it over very seriously. To, as you said, that banks are profitable not. Sir, banks are really going to be very, very profitable in the time to come. The thing is that we have to go to the customer where customer requires money tomorrow means we have to deliver tomorrow.
No, so thank you, Pramodji. I think let me turn this around now and try and steer this towards a piece of technology, because I think Rajneeshji, yourself, Atulji, everybody spoke about the fact that while banking is a good business, there are a lot of things happening and the models are likely to change. If the models are likely to change, and especially if your lending model is likely to change, it could be GST based, it could be income based, and whatever, it could be so many variables put together. Atulji, maybe this question is first to you. All of these elements that we spoke about, transactions, invoice financing, I'm assuming that they are likely to be technically oriented very, very soon, right? For example, invoices are going to become digital, right? GSTN is already capturing a huge amount of chunk of data. So it's sitting in a central server, right? And Modi ji coming and saying that, cryptocurrency and crypto rupee and all of that. Why do we even need banks here? Why do we need to send money from one place to another place, right? I have a big ledger, people talking about blockchain, I'm sure. I can just do a debit and credit, right? Why waste time, right? If electronic invoices are there, why waste time? So is it going to dramatically disrupt banking? And you think that this is about to come soon?
Yeah,
Atul,
Anil.
you're on mute. Yeah.
I was on mute. So let me just let us see a little bit backwards. If I try and go and say how our banking industry has changed, especially with effect to technology milestones, which we have seen in banking industries. Like in 1980s, somewhere we had that MICR. Then in 1990s, we had this ATM, electronic fund transfers, branch connectivity, computerization started somewhere in 1990. And then in this between 2000 Y2K, we had a big challenge. We did overcome that challenge. And between 2000 and 2010, we had this RTGS, NEFT, all these things, online banking coming in, tele-banking coming in. Maybe now we have talking about mobile banking, we are talking about UPI, API, e-wallets. So our banking industry is continuously having the change which is required. Maybe the pace of change would have different. Maybe the recipients may not have got that services which otherwise was expected. Coming to this private banks and NBFCs who are there into this area, they may have faster reciprocatory thing. They give the services very, very fast, and so the turnaround time of this private banks and NBFCs are good. So therefore the public at large is going for this sort of banks because now they require services. So all the banking banks would be now be driven by the requirement, by the needs, by the wants of the customers. And those who will not follow what are the requirements, what are the wants, I think they would be out of business. Coming to your question, whether we require a bank or not, at least next few years, I feel still we do not have a great challenge, because come what may, there would be various things where the banks would be required. So if I see some of the surveys which were carried out very, very recently, Like currently also, if I see how many of us do have only online banking. Yes, if I see the statistics correctly, in India, around 68% of the people do have the access to online banking. But is that only online banking they are using? No. I think the only online banking users today would be not more than, I think, 24%. And that is also right now it is between the age of 18 and 24. But the survey which has been done very clearly says that this number is going to jump nearly 50% of this age group by 2025 would have this online only banking. That is, there will be no physical bank for them. They would do only online banking. Similarly, if I see the wonderful results which I could see in the research was that almost 42% in 2025 who are aged above 65 will have access for this online only banking. The reason is naturally the age and the technology which is there. Everybody is having an handhold mobiles, and the gradual shift from your online internet banking is gradually shifting to this app oriented banks. So if I see the research which have been happening, they are not very clear that banks would be out in next few years or so, because at the most it would be 50% of the people who would go only for online banking. Still 50% of them would have a lot of banking which would be their physical banking. There are various reasons as far as the bank is concerned. In India, we have various drawbacks for that. We have various constraints by which this particular online banking may not happen. First of all, maybe I could say the mindset of the people. Still there are many people who still feel that that physical banking is must, and they should go for that physical banking, though they may do major transactions on online banking. But for few of the services, they would prefer to go for this physical banking. Moreover, if I see the weaknesses which our system would have is, still, the connectivity part of it is still not that great in India. And when I'm talking about connectivity, is both connectivity, your electricity as well as the networking, the internet connectivity. Also, there are a lot of still misconceptions of the security in e-banking, and this we are seeing day in and day out. There are a number of frauds which are being committed, not because of the system, maybe because people using it still are not educated enough to use this particular banking. So therefore people may not have that trust on this sort of system. Moreover, we also have a lot of rural banking which is happening, and the penetration in this rural banking is not that great. Similarly, when we talk about online payment, many places still that online payments are not accepted. Yes, over a period of time, maybe if you take a 10-year span of time, things would change, because the pace of change which is happening is really absolutely great. I just spoke about 1980 to this decade. You see the pace of change. How things are happening. Why talk about so many years back? Just talk 2 years back, March 2020. What was the online banking we were doing, and what we are doing today? So the pace of changing very fast. But somewhere I believe that will not be that our physical bank would be out. This is what is my opinion.
So,
Thank you.
so what I get from you is that there is still some time to do this. Jinand, do you think you will go and disrupt this very quickly and hopefully prove Atulji wrong, that in the next 5 years, our banking system can take a leapfrog of a generation?
So my personal view in this segment is that the time is already gone. Means the time that was available for banks to go digital is already gone. The next 5 years were the years when you had to go digital. Today the banks are looking into the pros and cons of the people who are not going to go digital, right? 100% all the points that Bheda sir told was perfect. It's 100%. That's how it's going to be. But there is going to be one leg of millennials who are today digital. So where are the banks of today, the largest banks of today? Where are they in digitization? Say for payments, say for lending, right? Lending, GST-based lending was 2018, right? We are in 2022. Invoice-based financing, GST-based financing, payment transaction-based financing, all these things as on today on 2022 is any bank live, right? So definitely fintechs have a big opportunity, because the time that is taken by a giant to implement it is going to be years. And some fintech will take it up, right? So from my
So,
if you ask, it's
I kind of saw a presentation from one of the big consulting firms, of course, and they kind of divided every part of a bank, right from the front facing, which is services. Then they kind of divided it into payment systems, credit cards, debit cards, treasury systems that you offer to your clients. Because today you started to offer a treasury for even mid-sized companies, and they're able to book their every piece of product that a bank runs, right? There was a fintech company marked to every process that you have, right? So Rajneesh, maybe this is for you. Personally, I was slightly worried that banks have been fairly conventional, and of course they are conservative, and they should be one, because regulator is on the neck, and you have public trust and you hold public money and all of that. But I think if every piece of our business is targeted by another company which only specializes in that business, right? A treasury company, fintech specializing only in treasury, a payment system company specializing only in payment. I mean, they get up in the morning and they think only payments, right? Whereas you have to think CASA, this, that, you have to think about your branches. You have to also think about somebody, doing a writing somewhere in some corner of the country, whether the generator is working or not, all of that problems you have. So I'm saying, how are we going to surmount these issues in the next 4 or 5 years? And do you think that it is even possible to sustain it for so long? While I completely respect the fact that what Atulji said, majority of our population, of course, India is still not, mature. Majority of our population is struggling, will struggle. A senior versus junior, millennials coming in. We never thought that Zerodha would probably come up and pick up so fast. So sometimes what we think that technology is not only to disrupt, is literally disrupting it even before we think it is. So you think we'll be able to hold this?
Yeah, so it's a very good question. What Atulji said is also right. There are two Indias. One is India, one is Bharat. So India may be digital. There are people who are there who are HNI. They are digital. There is a Bharat where there is no connectivity, where people are still not on smartphone. They are still on the feature phones, and that kind of thing is there. And Jinand ji is also right that 2018 was different. Today we are sitting in 2022, and going forward to 2025 we have to think differently. And as you rightly put in your question, that every part of the banking system is getting digitized, and a lot of fintechs and other players are coming, whether in the payment side, debit side, credit side, everything is coming. And now digital currency also is moving in face of us once RBI opens it.
Correct.
So what I feel is, going forward in the next 4 to 5 years, each bank, what the strategy would be, that each bank would be tying up with these fintechs at all levels, all around. So bank will be in the center, and all around will these be fintechs through the API platform. All these will be tied up. So otherwise, if banks try to work in isolation, a bank, no matter fact how big or large the bank is, so efficiencies and market share will be lost out. So if the bank has to be part of that market share and do all kinds of things, they have to tie up with so many fintechs together. So their IT platform has to be very much robust to assimilate all these fintechs, so that straight through processes happen for all kinds of activities, whether it is a saving account, a current account aggregators are coming. That will again change the paradigm how the banking will happen over the next 4 to 5 years. Once I give my consent for an account aggregator, so obviously I can do banking or anything from anywhere. So I don't need a Union Bank itself. My saving bank may be with Union Bank, but my all other facilities through account aggregator may be from some other partner, through some other fintech. So that kind of thing is happening. So for me, a agile bank today, how big the bank will be, to have lot of co-lending platforms, coordinations, cooperations with all these fintechs, and give all kinds of products along with their fintechs with tie-ups. So this is where I see the next 4 or 5 years in bank.
No, thank you. I think of course, and this is probably a strategy which is pretty good in the short term, and as business evolves, I'm sure we'll evolve and learn through it. But
hello, madam.
What I
કેમ છો મામી?
can
મામા જયજી કેમ છો?
Murtuza, can I request Ketan or somebody that if we can request everybody else to go on mute except for the panelists, please?
Okay. I'll talk to the backend team and I'll get it done. Yes.
Yes, please. Yeah, except for the panelists. Thank you. So Atulji, I think while hearing Rajneesh in terms of even strategizing, I don't know, somewhere in my mind I get a feeling that bank is becoming more of an infrastructure company. They have a license, they will have technology, right? And of course, license and technology is not very easy to get. I mean, they've established over a period of time, and they have this big fat pipe, and you have all of these businesses in and around who would then, do what they have to do. So, if this were to be one, how would the business model of the bank evolve? Because the margins are going to be really taking a hit. So, you think this is how it will look like, or there is something else which is likely to happen in the banking industry?
So Anil, just if I see the composition of the recipients of the services provided by the bank. So even if today in city like Bombay, if you go to a branch, I'm sure you're not going to the branch even for audit purpose. You're not going because you're a very, very techno-savvy person sitting at your office. You are doing all the audits. But try and go to the bank branch. And especially I'm talking about any bank branch in Mumbai, city like Mumbai, and invariably you will get someone and come to you and he will request you, भाई साहब ये थोड़ा slip भर के दो मुझे भरना नहीं आता है. This is one type of customers which the banks have to cater. The other type of customers who are absolutely techno savvy in whole 365 days may not have gone to bank even once, and I'm sure you must be dealing with this sort of people in huge numbers, especially the educated youngsters. Now these people, they do not keep anything with them, including the bank statements with them. Whenever required, they go to the through their app, and you get the bank statements, you get whatever things which are happening in bank, they'll get it. So these are extreme sorts of customers to which the banks have to cater. Now in this scenario, how can I say that everything would be digitized, everything would be technology driven, though government is very, very firm and they want to digitalize and use technology to just just I was hearing Srimati Nirmala Sitharaman ji just few days back on the budget, when she was presenting the budget. I think the word digital and technology was used 60 times while presenting this year's budget. And she also said, the scheduled commercial banks to set up 75 digital banks in 75 districts. And most important, the thing which she talked about was that 1.5 lakhs post offices will have core banking systems, which is really absolutely great. That will really boost the digitization of the banking functions. Now here comes a beautiful way of integration. You have 1.5 lakhs post offices which having crores of accounts, and all these accounts are now digitally connected. Here we have private sector banks who are absolutely fantastic in giving the services. So this integration of these two coming together would be really doing a wonderful job, whereby both things will go simultaneously, at least for next decade or so. At least I'm saying, because I don't see that this what we talk about, the lot who still is not aware how to fill up a paying slip. and if I expect that this particular clientele will go directly digitized, and they would directly start operating maybe through their laptop or maybe through mobile app, and they're doing to do this banking jobs, it's very, very difficult. But yes, these two things coming together, like 1.5 lakhs post offices being digitalized using core banking system, and all of them connected through the internet banking and digitalization, and these private banks, now they have connectivity, they can use their through the APIs, etc., and using technology, now they can be connected with whole of this country, and that this beautiful integration can really make a lot of changes in the banking industry.
No,
So yeah,
absolutely.
sorry.
Yeah,
Please,
I said
please.
absolutely. I think this is going to be dramatically changing if we were able to leverage all of this that you're saying, and of course it can create a nice ecosystem around whatever we're doing to look at the next maybe generation. While we're talking about, and you're right, we're talking about digital every corner. Whatever we do today, we're talking about digital. So Pramodji, you've come again through and through. You've had touch with people. You would have probably worked with the branches. When there is a human touch to everything, there is a different way that somebody looks at it. And today it's all digital. People don't even want to talk to people, right? And still, banks are investing a lot of money in call centers, in making sure the apps are there. And forget about call center and apps. People now want to make it robotics. So आपने call किया तो automatically कोई जवाब दे देगा, and it'll do all of that. How do you see this transition taking place? And do you see that losing that human touch would impact anything that we're doing around the business?
Actually, according to me, it is my personal view. I have seen this banking with a evolution, not with revolution actually. Starting, I think our honorable panel member has told, first core banking come, then technology come, then computerization, then it was evolving in a particular time. So as on today, if you ask me, there must be a hybrid model, and it is really acceptable. If you see the condition in India, every bank has to invest immediately. Time is not there because fintech, e-commerce companies, private sector banks, they have already taken the lead. Now the public sector bank who runs fast and who is creating an ecosystem in itself and giving a huge investment to the digital platform can take the lead. Still time is there. As Jinand has told just now, okay, already 2 years gone. These are the old things. And definitely, immediately 100% digitization is not possible because still our 50-60% population is from rural India. And as our Atul sir has told, it was a fantastic decision by the finance minister that all post offices are going to be now digitalized in the core banking system. So it is the idea from the Prime Minister sir and the Prime Minister Finance Minister that now the digitalization, digital banking should reach to the last man in layer, last man in the system. So he should also, because now everybody is using mobile. And now what I understand that if we talk about digital banking, we have 3.8 crore approximately taxpayers and over approximately 40 crores smart mobile users. So these are the persons who are utilizing the digital banking on mobile. And you rightly said, if today we have not invested heavily, if we have not given time heavily, then it will be very difficult for the public sector bank even to generate the income.
No, Pramodji, while yes, you're absolutely right. My one part of the question was that this human touch element, right, which is so important when you serve your customers. And today there is no human touch element. Do you see any, like you've been through all of this, right? Do you see this new model surviving? Or you see that no, there has to be a human intervention?
Actually, we have to now categorize. I told you hybrid model. For example, in metro cities, where the software engineers are there, high-tech people are there, then we have to decide. Public sector bank has to decide that If, for example, if I take our bank, we have over 9,000 branches. Let us decide that first 500 or 600 branches will be 100% digital this year. Another 500 tier 1, tier 2, tier 3, tier 4. Like that, we have to now think it over. But if you go immediately to regular sector, so human touch will be there in India. It will never wiped out. It will take time. If you talk about 2030 or 35, yes, definitely. Because if we think about the past, then we can understand, okay, as you told, that banking in the box or banking in the mobile will be the future after 10 years.
Thank you. So, Jinand, I think based on the conversations that I'm having with Rajneesh ji, Atul ji, Pramod ji, there is an underlining strong feeling that while whatever we are doing around technology, of course, Rajneesh spoke about a strategy that, you'll have a model where you quickly engage with fintechs and the banks would have to do that. And I'm sure you're credited with the fact that, you're one of the innovators around the 59-second loan and stuff. So I'm saying, what is it that you're seeing in technology evolving, which will change the ability of the banks to lend very quickly and still control what they have to? And then probably I'll put it back to Atulji in terms of, how do you manage your NPAs when you want it to be staged through? So, Jinad, maybe on the business side first, how do you make sure that you give thousands of crores of loans in 59 seconds?
One very important point, which all the three other panelists made, was the requirement of physical leg would always remain. You would have known that in past, HDFC Bank also invested in a network called as Common Service Center, right? Because they need to reach the rural people. Right? So that leg, even the top private sector banks who are going digital will always look for such networks that can help them build that leg. Right? So that will always stay. The other side is to reach the volume. So one is this kind of networks which are there, or say chartered accountants as a profession. So this all networks will get a lot of leverage from the technology. So one example.
I think there is a
So one example, Anil ji, you yourself gave was banks are becoming infrastructure companies, right? And what Rajneesh ji told is all API connectivities will be there in that. So once this infrastructure is created, or once this infrastructure is rolled out, it will be rolled out to a lot of networks, which will be the physical leg rather than the branches going, right? So that will bring a lot of business to banks. So that leg will be useful for CAs, that will be useful for CACs or other BCs that are there in the network. So that will bring a lot of business. The other thing is millennials will not like to meet people, will not like to go to branch. I have not visited the branch since last 1 year. Not many of us would not have visited.
I have not visited a branch the last 15 years, Jinad. I don't know. Not because I'm a technology savvy, but I honestly, I mean, that's by itself.
Yeah, in UK there is a bank called as Atom Bank, that is completely digital branch. No branch are there, right? So that is where, see, only thing that in India is holding back is the regulatory requirements and the license for banking, right? So till the regulators are also confident, till the banks are also confident, this will take some time. What Atulji also told, 3 to 5 years timeline is what we should expect. That seems fine. So all things combined, networks, infrastructure for banks, the regulators giving some leeways going forward, and few things which are today happening and becoming digital, like the post office is going digital, infrastructure going digital. This API driven, all the systems talking is future, where the business, say a 59-second, even 1 second loan can be given, right? A term loan and working capital loans.
Jinad, I think, in the last, sorry to interject, but in the last couple of years that I've seen, not only in India, but across the world, governments have been investing so heavily and they have been so successful in doing digital investments has been amazing. Like, for example, the simple thing like a GST and network, it's a humongous investment and it works, right? And even CoWIN app, for example, I mean, people will think that, it should work, it should be better. Can you imagine billion people logging on, ability of the APIs to do it, running across, generating what it has to generate? It looks simple, but I think the government somewhere is far ahead in the game in terms of investing, and I see this happening across the world. So I just wanted to kind of extend this question, Jinad, and maybe to Rajneesh, that do you see a Zerodha kind of a model in banking world? Like, for example, it will be completely state through. right? A deposit comes in, lending goes out, CASA is maintained, RBI regulatory data flows because everything is data structured. All of those behind work is already done. Do you think this model is likely to happen today or tomorrow? Yeah, you're on mute, sir.
Yeah. Am I audible?
Yes, please.
Yes. So you are perfectly right. This model will also be there like Zerodha. Very much it will be there. So in a macro, as Jinand rightly said, in UK there is a bank which doesn't have a branch. In Germany also there is a bank which doesn't have a branch. It operates totally digital, both on the liability side and also on the asset side. See, in a country like India, which has a 130 crore population, which has a GDP of say 310 trillion rupees at present, it is huge. So it has huge kind of diverse population. So we have huge income and this gap disparity is there. So we have people who are below the poverty line. We have rich, maybe 2% of the people are having 40-50% of the wealth in the country. So it is a diversified country, and I feel as a macro level and in the financial space level, there will be many models present and they will all survive. So there will be a bank, there will be a financial institution, there will be an NBFC, there will be small payment bank, there will be Zerodha type of things, there will be Paytms also, there will be all kinds of things, and they will all will survive. See, it is only a question of survival of the fittest. So there will be certain categories of customers who every business model will have to cater to. If there is an infrastructure lending happening, so if a port is coming up of 10,000 crores, obviously I don't think a fintech will be able to give that credit appraisal and other things. I don't foresee it.
Very interesting one. If I can just hold you there for a minute. It's a very interesting observation that you have made. A 10,000 crore port, right? Will it be possible for a fintech company to scale up and offer something like that? So, Jinand, do you think that do you see anywhere in your mind there's an opportunity with the model of the fintech maybe getting closer to market, maybe getting closer to a smart contract or whatever it could be? And would it evolve? Because one of my question was, will wholesale banking change? And I think that Rajneesh has kind of touched upon that subject. So let me try and see if you have any ability to innovate or disrupt this area, which I think would be a very interesting one.
So only thing I was hoping when you made the statement and you asked the question, it should not come to me. Yeah, so this is a very tricky question.
Going to go back.
Loan being disbursed through a fintech, so that would be a dream of a fintech when this would be done, right? And through the systems and processes, and giving the comfort to the banker that you be rest assured the NPA will not come for this customer where you are lending such high amount of value. So definitely, if you ask me, any time midnight, I would say this is a dream for us. But yes, it will take a lot of algos and a lot of stuff to be interlinked before the decision is made by the system to give a go ahead to the banks, because these loans need a lot of approvals at bank level also. So system to give that.
No, I'm saying let's not even think you are straight through processing right now. Let's just break up the problem into two sets. Banks have 10,000 crores to lend. Why? Because there are millions of people in the country putting small amount in the banks, right? So somebody will put 10 rupees, 20 rupees, 100 rupees, 50 rupees. And eventually everybody has an appetite of risk, right? So maybe your appetite of risk, if I come and ask you, can you please give me some money? Maybe you don't know me, so you'll say, okay, I don't mind giving you 10 rupees and maybe interest will come, maybe not come, or whatever, right? So the appetite of risk is driven person to person, and that's how the equity markets have evolved, for example. So I'm saying let's not even go full stage through processing. I'm saying would platforms emerge where the entire role of a bank to collect money, put it in a safe, and then give it to some set of people. Some means, wholesale banking is always limited to some set of people, in the sense 1,000, 2,000, 5,000 customers at a BIPS margin of only maybe 0.25%, sometimes 0.5%, maybe 1%, maybe 2%. Would there be an opportunity for people to do crowdsourcing here, to be able to reach out to maybe 100,000 people in city of Mumbai, maybe 1 million, maybe in the city of entire Maharashtra maybe 20 million, and maybe then in India in a 1 billion, and say that there is a 10,000 crore port coming up, and people would want to not really invest but maybe lend, and that thing goes out and somebody comes and quickly finishes the loan. Is there something like that which could probably come up?
So my straight answer to this is that we all know in US the bond market is huge as compared to equity market. So when that infrastructure is built, right, and this kind of bonds are leveraged directly through that bond infrastructure, that's when and all digital to a certain extent that it's possible. That's when I think what you are asking should be possible in India also.
Fantastic. So given the fact that this might be possible, Atulji, and your job being an audit committee chairman makes it difficult for you. You're not able to, not you, the banking system is not able to handle the NPA systems or the way that the NPAs are processed. And while I think everybody spoke about good margins in banking, we know that while the margins may be good, but when one NPA actually wipes out your entire balance sheet, right? In terms of if there is significant, of course, not all NPAs would do that. So how do you, in this new world where Jinand is probably talking about the fact that even wholesale lending could go through a transformation, right? Where Niji is saying that there are APIs which are going to be interconnected and somebody else is going to lend, right? Based on some value. Maybe Jinand does a 59-second loan because he looks at a LinkedIn profile of Anil Bhandari and says 1 lakh rupees, Anil Bhandari, no problem. Atulji maybe 10 lakh rupees because he's a chairman of the audit committee, so that's not a problem, right? So how do you think this entire NPA system are likely to evolve, and where is this control coming in?
Anil, this question is to me?
Yes, please.
Okay, great. So, see, Anil, what we are talking about, 1 minute loan or whatever, I'll try to correlate this with a very recent things being happening at the income tax level. We have faceless assessments which are happening. It is something similar where bulk of documents are being whatever documents are required, they have been being given online, and you don't know where the person is sitting who is doing the assessment, and then suddenly you see that there is a draft order which has been given, and then further documents. And so we have already started going into that direction where the faceless things have started happening. Now here when you talk about NPA, let us understand the root cause of NPA. The root cause of NPA is because the person who is taking the loan, he knows that if he does not repay back, nothing is going to happen to him. And because our judiciary system, the legal system is such that people, those who are not paying, nothing is happening to them. People can run away, people cannot brought back to India, and that gives and confidence to the person who is taking the loans that no problem, it's absolutely normal to not repay the loan, and therefore through various means he is absolutely sharp enough to take that loans. Now there are so many SOPs which are there in the banking industries. There are various standards which are there. Had this all standards been followed properly, there would be zero NPA. But very unfortunately, what we are seeing is there are huge number of NPAs, and these NPAs are due to only the reason that the borrower is very much sure that if I do not pay, nothing is going to happen. That is one. Second is the lender part of it. When the lender also, when we try to see, exactly who was the person culprit that who has lended this money, again that person also knows यार कुछ नहीं होना है यार, पैसा देना है तो ठीक है, एनपीए होगी 2-4 साल में इधर उधर करेंगे और मुझे भी कुछ नहीं होना है, ना बोरोर कुछ होना है, ना लेंडर को कुछ होना है. And this is the reason fundamentally why this huge NPA is been created. Unless and until we have a very robust legal and judiciary system where the whatever punishments which are there is for both lender and the borrower, if it is happening fast, I think this problem of NPA would be absolutely out. And as far as the opportunities are concerned, whatever we talked about, government is giving huge opportunities. As you rightly said, government supports, government's policies, government's investments in e-banking. Uh, I think they're fantastic. Also, somebody says, fittest of the survival. I think yes, that is also absolutely yes. The survival will be of the fittest person, because there will be new banking sectors because of these initiatives being taken. This may lead to increase in the quality and decrease in the cost of services provided because of this e-banking. But unless and until we have this particular legal and judiciary system very strong, I'm sure this NPA problem cannot be resolved so easily. That's all from my side. Anil.
So, Atulji, thank you so much. Rajneesh, I wanted to, you've been part of the banking system and you've kind of, reached to a level where you have a good understanding. I wanted to touch upon the softer aspects of an NPA, right? And maybe the thought process in one's mind that an NPA account is always looked at suspiciously, right? And sometimes we always feel that the one who's taking the money is actually a thief. And while we should also understand the fact that bank is also doing business, right? It is lending money and making money out of it. It is not doing, how should I put it? It is not doing government's job where government is collecting taxes and you're giving money to people. Do you think there is a requirement in the minds of the regulator and the banks that the entire concept of lending has to, and maybe the culture of how you see this NPS should change, and would it likely change?
Sorry, Anil, I lost track. There was a network issue. Can you please repeat?
What I'm saying is, historically, any NPA account is viewed suspiciously. And people who take money and not able to repay, of course, there are good and bad people both. So I'm not talking about the fraud ones. I'm talking about 60-70% of the people. Maybe in country earlier it would have been 50-50. Maybe slightly it's becoming better. So 60% of the people who take money and who are not able to repay. But the mindset of the bankers, the regulators, is that the person who's not able to repay is a thief, right? And we always look at it very suspiciously. Right? At the end of the day, one has to realize that the bank is also doing business only. No, bank is also taking money from people and lending it to people and getting interest out of it. So when you're doing business, there is an opportunity for you to make loss. You would make loss, and you are calculating that loss when you're lending money. So is there a requirement, a strong need for the entire culture to go through a change where we say we are doing business, we are likely to make a loss? Right? Because the businessmen also make a loss. Do you think there is a need for this, or no? There is absolutely no need, and the system operates and the way it should operate, it does operate. You're on mute, sir. You're on mute.
Can you hear me now?
Yeah. Yes.
Yeah. So you are perfectly right. So the ecosystem, as far as the lending ecosystem is evolving, in the ecosystem, I would say the government is there, RBI is there, and all other agencies are also there. So they are evolving. I will begin with one simple example. If you buy a new car and keep it in the garage, there will be no issue with the car. It won't get any dented or any accident would happen. But if you take the car on the road, there is always a chance of accident. So banks are commercial organizations. We lend, we do a commercial decision making. Some commercial decisions will be right. Some commercial decisions will go wrong. It is bound to happen. It has been happening around the world, across the globe, and for tens and I would say a century of years. So some accounts do go bad. So matured, we are as an economy, we are maturing. Now the managements also know, the boards also know that there are certain accounts which are bound to go bad. As I had said in my keynote address, there are two basic principles when any financial intermediary lends, which is the good borrower and a good asset. So when you are lending, if it is a good borrower and if it is a good asset, so normally it will not turn to NPA. Even if it turns to NPA, the probability of default is less. There will be very few accounts. And even if the account goes NPA, the LGD, the loss given default will be less. If the borrower is good and the asset is good. So this is where the due diligence of the credit appraisal happens, credit underwriting happens. You have to, at that level of credit underwriting, you have to underwrite a good asset and a good borrower. The problem you rightly said, Anilji, was when the underwriting happens and the underwriting is wrong, in the sense that you underwrite with a bad borrower and with a bad asset, that the money you lent did not go for the asset which had to be acquired. So there is the bad borrower and a bad asset, and there the problem starts. There you have to find fault with the borrower. The borrower is also not at the correct way, and even the underwriter is not correct. Maybe there is a lack of skill level, or there is some maleficence. So both things are there. Today the management are very much matured. They try to analyze where the issue is, whether it is a bad borrower and a bad asset, or whether it was a good borrower and a good asset, and because of the normal business failure, it is a normal business failure. I am very clear and very upfront being with you that all the managements across the banking system has matured, and they are clearly demarcating both these kinds of assets and borrowers.
Fantastic. No, thank you so much. I think this really brings good clarity, and I'm sure it should hopefully bring good clarity in minds of our members also attending. And I think it's a very important area even for us as auditors. Unfortunately, when we go as auditors, and if the loans were to become NPA, not only regulator or everybody is looking at the bank not doing a good job, the auditors also not doing a good job, and sometimes the bank feeling that the auditor is not doing a good job. And eventually what we are saying is, it's 100,000 crore balance sheet and you're likely to make a loss, and it's a given fact of business. So I think, Pramodji, this question is to you. You've seen so much of operations all your life. There's a lot of automation projects happening in the bank, right? I'm not sure if your bank has undertaken some automation projects, but there are bots being written, things which are repetitive in nature is likely to become faster, easier, and maybe jobs are likely to be lost. Do you have any views on in terms of what's happening? What kind of automation is happening? If you would have seen anything in your bank.
Yes, in our bank, actually, we have invested to implement our CRM module, and another one is trade finance module. So in department, I think in retail banking also, in audit section also, in our IBD also, and it's a constant process of automation. It is not of repetitive nature, but definitely it is constantly going on, because without automation it is very difficult to survive.
All right. No, good. So I think I'll get this question to you, Jinand. We spoke about NPA, we spoke about the culture. How do you see technology trying to correct this forum? Do you think that there's going to be enough tech which will try and reduce the burden on minds of Atulji, for example, Rajneesh for sure, because he's in the thick of the battle, and Atulji because he's in thick of the battle for governance. So do you think you have an opportunity to reduce their burden?
So the answer is definitely yes. Not only us, every fintech in the country has a lot of potential to help the banks, in leveraging the fintech potential, right? But one thing which is very critical, say we have been, in that way blessed, because the PSBs are our shareholders and some private sector banks are our shareholders. The knowledge that we have found in say like Pramodji is there. So many years of ground level knowledge, it helps you to build products. So if a fintech is building product, right, or any IT system is being built, you need this knowledge, that what is the problem that happens at ground level. If you get this right knowledge, if you get the right people, you can actually build products which are really good. So that is definitely an opportunity for every fintech to build products. The other thing is for reducing the losses for the bank. Yes, what Rajneesh told is right. The car is going out on the road, it is going to have some or the other dent someday, right? So those NPAs are going to come. So what we have figured out, we have been working very closely with the PSBs, is that the banks that are actually lending, including Union Bank, that is lent using a digital platform, right, and which has connectivity, API connectivity, where data is processed digitally in a manner that the banks wanted. The NPA was like 1/4 of their normal NPS, how it used to happen. So technology definitely is there, including we had a detailed discussion with the top bureau of the country, and they showed that the customers that are getting digital disbursement are actually on the best line today on the governance standard, on the credit side. They are the best performance today. So that is also seeing that digital thing is also bringing some governance to the businessmen, and it is also bringing the NPS down. But yes, if this digital technology is used without any background, means you just want to you want to experiment something without taking any inputs, yes, there will be NPS. So if you are doing experiment, you have to be prepared for NPS. But if you have thought it well and implement it with a lot of knowledge and insights from people who have experience in this, the NPS will be a lot lower than you expect today from manual.
Fantastic. So,
Anilji, one thing I would like to tell Anilji here, as our ED sir has told also, the first most important thing is the selection of the borrower. First thing, and then after that, if your selection of the borrower is went wrong, for example, then what I understand that there must be a robust system of collection. The way you lend, either physical or digital, whatever it is, because why the public sector banks has huge NPAs, because our system of collection is not up to the mark. See, why we have allowed the account to become SMA 0, SMA 1, because we do not have proper control. We are not asking. I have seen the customer telling, when I was heading one of the branch in Bangalore, a person is coming to the branch depositing cash. Sir, my check वापस हो जाएगा. Sir, मेरा एक 10,000 जमा करवा दीजिए 4 बजे. I said, क्या हुआ है? No, sir, वो ICICI bank, otherwise he will put the 1,000 rupees penalty. And the same person is having the loan account with me also. He said, sir, आपका तो मैं जमा कर दूंगा 15 दिन के बाद. That kind of thing. So, because we are not demanding, we are not asking, and the robust system, because see, it is up to all of us as a public sector bank to decide. If tomorrow your EMI is due, you have to pay tomorrow itself. So, if it is going in the society very clearly, then the system will be completely changed. And number two, as far as told, there is a two things, sir. There is a very thin line. I was listening to Deepak Parekhji once. He told a very fantastic example at the time of Kingfisher failure. I do not know how far it is correct or not, but he quoted this. There is a very thin line between the willful default and the business failure. As our Rajneesh sir has told, sir, you can't suspect the bankers on the business failure. But what is happening today? That our regulator authorities and our top authorities, outside authorities, they are doubting on the bankers. There may be 1 or 2% hand in gloves, but that doesn't mean. And the most important thing, sir, as our Atul sir has also told, and our ED sir, that our judiciary, let our judiciary should create certain examples in the society. They have made certain decisions, sir. Like our Supreme Court has told that High Court has no authority to give the stay on SARFAESI notices, sir. Still, they are giving it to you. So they should have put some penalties. And High Court judges and these people are also responsible, because they are now. See, I will tell one thing, sir, that our finance ministry has created DRT. DRT is not coming up to the market. Then we came with the NCLT. Lot of issues are with NCLT. We are not able to recover the money properly. And I have listened to so many big borrowers, small borrowers. They say very clearly, okay, let it be NPA, yaar. 1 साल का time मिलेगा ना. तब तक हम कुछ इंतजाम कर लेंगे. We will repay. So that kind of things are going in the society.
No, I understand. No, of course. See, this also is a maturity curve of how the country goes through, right? I mean, India was supposed to be a poor country. We didn't have road signals. Now people know not to cross when it is red or whatever. So it's an evolution, I believe. And I think, just as you said, the judiciary also has to come in. And I'm hoping that there's a lot of tech in judiciary also, because it seems in America and Watson, I think the judicial decisions also come out faster. So you're absolutely right. Rajneesh, this question is to you. The blockchain has been spoken about several times. So I don't know if you have had any understanding or any idea about what is likely to happen around that, or maybe if your bank is doing around anything to do with blockchain investment.
So blockchain is also very important integral part and the way forward journey as far as digital is concerned. So one is this cyber currency which will be coming. Most likely it would be through blockchain only. And as far as we are concerned and the banking system is concerned, this trade finance activity and trade finance funding, which is there, the platform is there, which is with us also. This is all through blockchain technology only. So the blockchain technology will be there, and it is already starting inroads. Private banks, ICAI, Axis have already started. We have also started. So trade financing, opening of LC and bank guarantees, invoicing, and all other things, that will all be through blockchain technology. So blockchain technology will also be part of the ecosystem with the banking. That is for sure.
Fantastic. Fantastic. So I think Atulji, with all of this coming in and everything being automated, where do you see the scope of concurrent auditors and bank branch statutory auditors, and how is it likely to change? For example, what's your view in, how would the auditors also get accustomed to this, and what is it that they should deep dive in? Any thoughts on that?
So, Anil, a very, very relevant question. You are being doing day in and day out. You are being doing this, and you know it very well. What is the change which you are you are doing? You means I'm talking about your team. So if the businesses are changing, I'm sure the auditors have to change accordingly. Because if let us take all of us, when we did our CA, we had that physical, tick mark being done, and we used to have that red pen and green pen. But I think that is history. Nobody is doing that. So yes, the auditors would also require to adapt to this technology. So currently, what we are talking about, investigation audit, what we are talking is special assignments which we are giving. Probably that would be the norm, that all the audits will have to be performed maybe sitting at your own place. You use so many technologies, so many softwares, whereby just going through the data which is provided to you, you will be able to know that where is the requirement of further deep diving. So the auditors will have to find out that yes, from this whole data, which are the things which he requires to investigate into further. So the gradually things what we have did for so many years, I think that would have to stop. We'll have to change as per the business needs. So see, like today, many of the concurrent auditors, so-called concurrent auditors, are sitting at their office and they are doing audits for all across the branches. Earlier, it never used to happen like that. Because in earlier days, when you talk about concurrent audit, that means the fellow has to go to the bank, he has to sit daily and see all the transactions and all that things used to happen. Today, especially with the private banks, because there is so many centralized services which are happening at the branch level, not so many activities are happening, and therefore the concurrent auditors at the private banks are doing altogether different roles than what the concurrent auditors are doing at the nationalized banks. So the both auditors and auditee are changing. Auditors are changing based on the requirement. Two requirements. One is requirement as per the auditee, and another is requirement as per the regulators. So I think both these changes are happening, and auditors are very, very adaptable to all these changes, and more auditors are now using technology for the audits which they are conducting. And remote audit is nowadays a very, very common thing, thanks to I would say pandemic situation, where most of the audits of the branches and the banks have been conducted sitting at their own offices. So that is what is happening.
No, absolutely. So I think very well said. And I think, yes, auditors are adaptable. And sometimes with so much of tech being discussed, Atulji, I'm starting to feel that maybe we should, in the institute, say that you can do your chartered accountancy only after you finish your engineering, maybe. Yeah. So, we become a full techno-functional chartered accountant, and maybe that could add significant value to what is there. Rajneesh, you've heard Atul. Yes, Atulji, sorry. Please go ahead.
So just I'm sure all of us have cleared CA exams, and I don't know whether you have cleared one paper which was called as SADP, System Analysis and Data Processing. It was very technological driven paper. Those days whatever technology was used, but somewhere I feel you don't require to be engineer. You require to have a proper logic flow of transactions, how they're happening, even in digital media.
True.
I think once you are knowing that, things are done, and all chartered accountants are very deeply knowing how the businesses are happening. So you don't require that technological knowledge. You require the flow of the transactions, how they are happening in the physical mode.
Jinad is smiling. Jinad is smiling. So let's see what he has to say about it. Yeah. Jinad, should we put up a rule which says that first become engineers and then become chartered accountants? Yeah, I'll come to you, Pramod ji.
So I'm happy to switch it to Pramod ji, but yeah, so in the last one panel discussion that was there, I was asked one question that considering you are a CA and you want to add one subject in the CA institute, what would you do? I said I would like to add one subject on technology. Possibly we should have so one side of technology with Atul ji told is definitely there, but on the languages and on the AI analytics side, the things that are coming are very fast, and those can be used by us. So that was just one suggestion, and definitely not engineering background. Definitely, the logics are everything that works today also. But yes, a base knowledge of the languages that are used for doing the analytics and AI and ML thing is something that will help us in long term. So that's why I was pointing nothing else.
No, absolutely. I think in the long run, maybe even the accounting standards would get converted into electronic standards, and they will have a small tech background to it. And our auditors would have to have the ability to inject a piece of code to do anything that they would want to do, because the world you'll not be able to see. How can you see billions of transactions going through a stateful electronic system where maybe 10,000 crore rupees goes out in minutes, and you also have to control the fraud and the cybersecurity. So I don't know. I do cybersecurity on a daily basis and technology on a daily basis. I'm a chartered accountant, of course, but I think seeing it from that side, I have started to feel that maybe there is a merit in saying that you should be an engineer first and maybe then a chartered accountant, because that adds significant value from a business perspective. So Pramod ji, I'll take Rajneesh's last view on this, but before that, let me ask you. You had a view on this. You're on mute, sir. Yeah.
Actually, I wanted to ask something from because I am not chartered accountant, but one thing is very clear that I am also learning the technology daily from my son. Now he is working in Intel, so daily something new I wanted to learn from him. He is telling me he's a graphic engineer, software engineer. So whatever I learned today, tomorrow again something new will come, and then he will tell, now you forget this, you take this one. Now, second thing I wanted to ask, if you permit me, whether this blockchain technology is going to change your audit system also, or is going to affect your audit system also?
This blockchain technology, as I understand it, Pramodji, is fundamentally a system which ensures non-reputation and security around it, which means when you have done a transaction, you cannot come and say that I have not done a transaction, number one. Number two, it secures what you do, which means if you put up a system on top of a world ledger system, right? And you have maybe there would be a time in the future after 20 years where you have one single accounting system in maybe say one country, maybe all countries I will not want to discuss today, but maybe one, like you have SAP, Oracle, Tally, this, that. I'm saying one accounting system, maybe if the government wants to put up something, which is on a blockchain technology, which means if Pramodji has done a transaction in that accounting system, which has anything to do with my organization, right? You have to only do a debit and credit in that ledger, and automatically that impacts my ledger, and you cannot repudiate it because you have done the transaction, and I cannot say yes or no because you have done it and I have approved it, and the money automatically goes through. And now today the money has to actually flow to your bank account. So my accountant has to actually worry, what is the time period? When do I have to give this online transaction to the bank? When do I sign it? You have made it better because you've got an online system for me. Just imagine if there is cryptocurrency coming in tomorrow. I don't have to do anything. The ledger will make an API call and say that take out money from Anil Bhandari's account and put it in Pramodji's account. In 1 second, you're able to transact and the money becomes into your account. And Modi ji also knows how much money you have in your account, which means if he only puts one column next to the cryptocurrency column of your balances, then his tax is also taken care of, right? So so I'm saying fundamentally, if you look at the world in an ideal scenario, and innovation should always look at it in an ideal scenario, you will find tremendous merit in trying to do something like this, because the cost of technology today is not as what it was in the past, and the size and the swiftness of the technology is very, very quick. You know, the way that technology solutions and thoughts are coming up. So I think blockchain technology, creating a journal ledger across the country, maybe across the world tomorrow, is all likely to happen. There is no doubt about it. How fast it will happen, who will do it quickly, that is the question mark. And I always keep telling people, Pramodji, that we should, as a country, because we understand technology, like, you know, people like Jinand and all, we understand technology, and India has evolved on a technology platform. It's become a power on technology platform. We should leapfrog a generation, and
Correct.
that is where I think you know, we would need leaders, including yourself, Rajneesh, Atulji, where we go and tell a bank, please don't be reactive, please do be 20 years ahead of the game. And that is going to change significantly the way that, you know, probably anyone would look at it. So anyway, I think let me ask Shri first, and I would want to go back to my same subject of auditors, because all our members are watching. What is your view, sir? And is it a good idea for us to be engineers first and maybe chartered accountants later?
So my simple answer would be that let us keep it simple. Whether you go for engineering or you go for auditing, whatever, you have to understand the transaction. As Atulji has rightly said, how the transaction is flowing. So whether you are an IT guy, whether you are a chartered accountant, if you go simple and understand how the flow of transaction is happening, it is as simple as that. So basic
What is your
IQ is required,
expectation
nothing
in
more
this
than that.
tech world? Absolutely, well said, sir. What is your expectation? Like Atulji has clearly outlined that how, you know, auditors are adaptable, agile, and they will of course learn, and they are learning. Any expectations that you see in the new world where you're seeing all of these fintechs connecting to APIs and doing transactions?
Yeah, definitely there is a lot of integration happening, and with the chartered accountant community also. See, what we expect from the CAs also when they are coming for our audit, now that everything is so system driven, right? In the CPS platform, no printouts are there, nothing is there. So they also have to depend on lot of data analytics, lot of data dump they have to check, and all those kinds of things. So the CA fraternity also has to now look into how the data dump analysis can be done, how the files have to be decrypted, and how to read within the data. So there is huge data within the bank, right? When you call out of data from the system, CBS system, so data which is only relevant is information. Other than that is all garbage. It is as simple as that.
True.
So the auditor from the data dump has to see what is relevant and what is information for him as an auditor for the audit purpose, and rest all is all garbage. So that is how the data is today, and that is how the agility of the auditor is to see within that data dump what is relevant for him for the audit. So that is what I would like to say.
No, absolutely. No, thank you so much. I think that makes a good you know, takeaway for our members, that, you know, I think there has to be some element, while, you know, of course they can become technologists maybe going forward, but they need to have some element and a good element of tech today. It's no longer important, it's a necessity for them to be able to deep dive, because you are investing so much in technology. Atulji, we'll try, and we've got maybe around 10-15 minutes more. I just wanted to take a little shift towards maybe fraud likelihood because of this entire APIs and the fintech world coming up. So maybe I'll try and put it across to all my panelists here today, that are you seeing increase in quantum? Of course, I'm sure you would see increase in quantum, but, you know, what are the different scenarios which are likely to evolve? And where do you see, because you would have been part of so many presentations, where do you see how people are trying to, you know, plug the holes? You're on mute. Atulji, you're on mute. Yeah.
Anil, can you please repeat the question?
I'm saying with so much of tech and through that we spoke about, there is also an emerging issue around fraud, which is likely to happen. Of course, fraud happened. They've been there for several years. The only difference was frauds were in 100 crores, 200 crores. Now they'll be in $1 billion and $2 billion. You know, I mean, the size, the speed would go up. Are you aware about banks trying to, you know, put in and plug in holes in and around the possibility of this happening as we invest more in technology?
Let me just start with saying that security is a big problem. Today, if we say there are many security threats in online transactions, maybe like card trapping, fake website, keystroke logging, use of malware programs, because of all above threats, people are not using e-banking because of fear in their mind. Also, the regulators have put so many SOPs in place where the regular monitoring of this sort of transactions have to happen, and it has to be reported to the various level, including at the board level, like in the various committees and the board. We do get the feedback responses from the management that here are the frauds which are happened, here they are, how they have happened, how they have dealt with. So the regulator, the banks, they are taking due care. But you cannot stop. There are n number of police, there are n number of people who are seeing that the thing should not go bad. But in spite of that, all the illegal things are happening, and somewhere people who are doing this fraud, the intention is to do something wrong. And when the intention is there to do something wrong, they will find out the way to somewhere see that whatever securities you are putting in place, they will find out the way to see that that there will be some lapse in the securities. Like even the user, many times the cards are lost and they are not being properly deactivated, and then the fraud occurs. People do pass on their OTP numbers, people do pass on their PIN numbers without understanding that what they are doing. Though the regulators and the bankers, they are doing huge amount of work, advertisements, educating people, but in spite of things are not happening correctly. Moreover, misuse of the confidential data, I think this is one of the very key thing which is great danger to our banking system, because the data which the bankers have is something which no other person would be having except the regulators, maybe the income tax or maybe the other people. Now, if this particular confidential data is being compromised, I think a huge challenge is there for our banking industries. And one more very important practical thing is that since as a user, I don't know where to have these complaints made, and there are no doubt there are standard processes, but unfortunately as a user, I don't know what exact way I have to go. Where is this cyber crimes to be reported, whether it is to be reported to the banks, whether it is to be reported to Reserve Bank, whether to the local police station, or whether to that special police station which are cyber crime police stations. So all these things are being very difficult and challenging, and they are creating hurdles in our e-banking, in development of this sort of technology driven banking. So that is all I would talk about.
I think no, absolutely. So I think there are emerging challenges. So Rajneesh, I'm sure you are on the other side of the line, and you have to obviously protect the customer data, privacy, security. So you're seeing what kind of investments in tech which is going to actually kind of plug these holes? Any views that you would have here?
As rightly Atulji has said, that we are investing heavily in public sector banks also on technology. One, the technology platform which is there, which is the basic infrastructure, and also the surrounding technology around it to have cyber security. That is the key for all the banks. So security of data and transactions which are not vulnerable to any kind of threat are the basic things for any banking system and a public sector banks also. So for cyber security, we have that all these kinds of features there in the system. Along with that, all the public sector banks have a CISO there, who is the chief IT security officer, who takes care of all these things, and there is a chief compliance officer also in all the banks, who takes care and reports to the board also, to the audit committee of the board with respect to all the compliances, security compliances, cyber security. But the most important thing is for the banks is that there is a lot of cyber illiteracy, as Atulji has rightly said. So on onboarding on one part, giving our small customers saving account and current account customers mobile banking and internet banking is fine enough. That is very well said and done. But people also do not know how to operate them, and so there is a lot of cyber illiteracy. Rather than the vulnerability happening within the system, many times the fraud small which are happening around, which you read in the ecosystem in all the newspapers and all other places, is the illiteracy, cyber literacy on part of the customers also, because they are compromising with their data, they are compromising with their PIN, passwords, all kinds of things are happening. Apart from that, there are certain rogues within the system who are waiting for certain bugs, finding out some certain bugs and making some big payment online, which is a fraud payment. So all these things are there. We are trying to cope up with it. See, any kind of thing, whether when it was a physical thing, that time also challenges were there. People used to come. I remember 20 years ago, 25 years ago, suddenly a person would come to the branch with a check and say that I am Rajneesh Karnatak, and I was not Rajneesh, impersonating as a Rajneesh Karnatak, right? So that kind of thing was there 20 years ago. Or a person would come with a fake check or a fake signature, forced signature. So that was one level of thing when it was physical. Now there is another level, so that because it is digital, so these things will happen. And the more we evolve, blockchain we evolve, anywhere we evolve, there will be certain vulnerabilities always happening. It is bound to happen in any ecosystem, which will happen. So we have to live with it. We have to try to find out mitigations for it, plug the risk with it, and this is how we have to live with it. So, but notwithstanding all this, we have to develop the technology and move ahead.
So, Jinand, for example, before we conclude, maybe Pramodji I'll ask first and maybe then Jinand later. But Pramodji, what are your views? That have you seen? You've gone through the branch banking system, typically around fraud. Any specific areas that you think technology can be invested to protect any frauds?
Yeah, definitely. See, cyber security is very crucial to maintain the long-term relationships with customers, because customers are growing more concerned about data privacy and security. So, for our bank is concerned, and we are really investing a lot for the cyber security, because security as their personal information, financial life migrate online. All these things are challenges for the banks as on date. So now bank needs to develop, and we are doing it also on daily basis, as rightly said by sir, that you cannot remove from this cyber crime from the system. There will see these cyber hackers and these criminals, they are evolving new things every day. So we can mitigate, and we have to find out the ways. So now bank needs to develop strategies that are aligned with their business requirements, risk management protocols, and the regulatory requirements, and what is your risk taking appetite. All these things, according to me, in our bank also we are now. I can share one. See, we have celebrated 1 month for the cyber security only. Every day our CISO was organizing a cyber literacy in entire bank from 5 to 6, and amongst us there will be a guest speaker, and entire bank will be attending that webinar in the evening. So the literacy part is very important, and for the
got it. So I think awareness is something which is very important, and I understand from you that there is a lot of investment being made there. Now, Jinand, you've been on the technology side, and you've been on the innovation side. You think there are technology tools which are required, and what kinds ones could innovate, ones could work around to ensure that the banks of the future are able to run straight through?
See, straight through processing, is the norm today. Is something that is being talked about, yeah. And for straight through processing, 2-3 things what Rajneesh or Atulji or Pramodji told are very relevant, and possibly those who were there to hear your profile, right? Is the security thing where you are also an expert today, right? So for straight through processing, for fintechs to build products, right? First is security, how secure those transactions are going to be. So for fintechs, that is the biggest challenge, and for CISOs to accept, fintechs to have a straight through processing. But yes, banks' internal processors are robust enough. So fintechs, if they can partner with banks and put it in a way that CISOs are comfortable with that, because security is the biggest thing in that. Straight through processing, regulatory is one part. Once regulators are fine with it, second is the security, right? And third, which Atulji also and Pramodji also rightly pointed out, was what after disbursement, collection has to be digital, right? So how to bring the collection also robust enough to bring the technology to next level. So all these pieces are coming up really fast and really well. Banks are doing their work. Union Bank, we know they have a fintech division, and there is a lot of stuff happening at Union Bank where digitization is happening. But at the end of the day, the CISO has to accept. The chief data officer, the chief information officer, the chief risk officer are becoming more and more important, and you are in middle of all this, right, Nilji? So that's the most important thing going forward to succeed in the straight through processing also.
Oh, absolutely, I think very well said. And so I'm just trying to reiterate what Charanjit had been speaking about, that in terms of opportunities also, while the disruption is so I think the opportunities are also amazing for chartered accountants, especially because all that you're doing in the banking system is going through a change, which means there is a different way to look at things now. It's no longer the same way that one would look at. And I think from what I understand, and wanting to try and summarize this, that while in India, there is still some time for us to evolve from a hybrid model to a pure tech model. I think the time that one is looking at this evolution could be very fast, because of the fact that, we are also a very younger generation country now. Most of our people and the population is also maybe in the range of around and less than 30 years. So that would probably bring us towards maybe the usage, which will be largely more digital in the future. And that's how the recent age companies like Zomato, Zerodha, all of them have been able to acquire millions of customers, and they've been able to build a business model. I think Rajneesh put it very well that, while banks would have to continue to invest, I think the strategy in the short term or maybe in the near term has to be perfect in terms of making sure that collaboration is the only way to go across and collaborate with fintech organizations, because they're agile. Banks cannot be agile for the simple reason that they are heavily regulated, and there is an expectation from the banking system. So I think that is something which is, of course, in the near run, a good strategy, while the time that either the bank would merge into being fintechs, or the fintechs would then eventually being merged into banks, and that would probably evolve again. And I think from a governance angle, what could I understand is that while NPA happens to be and will continue to be an aspect that one would look at, maybe culture of making sure that we call it more as a business is very important. And I think that Nishi again made a point that I think it's important to change the culture while we do tech in terms of what we do. And I think Pramodji kind of mentioned about the human touch points, which is likely to continue to be important. And there's no way that everything would be taken over by bots or automation, because eventually world is round. With a lot of human touch, it is going towards technology for efficiency, but with a lot of technology also, probably it will come back to a full circle and say that human element and human touch would continue to remain very, very important and engaging. But I still believe personally, and I could be wrong, that I think the world has still not seen a banking revolution or a full disruption as we are seeing in other industries happen. For example, telecommunication also started with disruption, but today very quickly in 3 or 4 years, it's become like an infrastructure provider. They're just providing cables now, and telecommunications companies are actually becoming content-driven companies, and the models have to change. So the banking system, while I think the tech is ready, the banking system is still waiting at the edge to probably see the next revolution. And I think for our members especially, it's a great opportunity to be at that cusp where I think the banking systems, if they change, I know it would provide an amazing amount of opportunities for all of us. So I think I would want to end this by quickly asking everybody a one-line summation, what one would think of. So maybe I'll tie with Rajneesh first. Rajneesh, just to probably summarize, how do you see the world evolving around the banking system quickly in maybe 1 or 2 lines, if you could summarize?
So my summarization would be that the banking world would be digital entirely, and we have to adopt technology and adopt to the changing world. Metaverse is the future. So from present, it will definitely go to the meta level.
Fantastic. Atulji. You're on mute. Yeah.
Okay. I feel what is important is the reduction of time, the reduction of cost, the reduction of efforts in interaction, and the maximum amount of services that can be offered. I think that is the future of the banking industry. That's all.
Fantastic. Pramodji.
According to me, change is inevitable now. Now you have to be in the digital world only. As far as told metaverse and I do not know what are the most other things are there in future to come. So change is inevitable and we have to accept it. And how we can cope up with this changing technology, that is a challenge for us, the system, because we are living in this society. I have seen that evolution and you can say manual banking, then bland and band, and so on and so forth. So many things have come. So nobody can predict now. There may be a lot of things and definitely changes there. We have to accept this technological updation changes and we have to live with it. And we have to adapt it.
Fantastic. Jinand.
The only thing is we are already late in this, and for banks, user experience should be in the center while any technology adoption is happening. So that's the key thing from my side on the side.
Fantastic. I think you hit the nail. I think at the end of the day, I think the world is evolving towards an outcome-based model, and the outcome is it has to be experiential, and it has to offer a very different value to any customer, for example, or a consumer, for example. And banking in that way will not be kept behind. And I think it will continue to have to very necessarily evolve itself into an outcome-based model where people come to a bank only because they are kind of able to engage and change the experience of what they're doing. So I think all of this translates back into a good investment around technology and maybe a hybrid model with continued human touch. These are large, complex complexities that we are talking about, and the navigation still has to be done. I think it's a fantastic future all for us. And but I just wanted to thank all of you. I'm not sure if somebody is doing the formal vote of thanks, but I think this has been a fantastic session for almost 2 hours, that we have kind of tried to touch upon every aspect of a bank, from a model to how it is evolving, to how tech would probably transform it, whether that is going to be sustainable or not, and hopefully if it's likely to be sustainable, what is it that we're likely to see in the future. So thank you, Rajneesh. I think you've made some very, very, very interesting ones, and I especially pick up the fact that I'm looking at disruption around wholesale banking. And if that day comes across, I'm sure Jinand is going to smile a lot, because maybe his valuation will hit the roof. And Atulji, we have a different work to do as an audit committee chairman, because he'll only see numbers on the screens going forward. And Pramodji, you would have to make sure that all the operations are completely, hopefully, tech driven. And I'm not sure how you're going to manage your human touch, but thank you, everybody. Thank you, all the panelists. A fantastic interaction and engagement. And I'm hoping that the members have found this useful. So back to the WRC team.
So before Anil, WRC, on behalf of all the panelists, I would say thank you so much, Anil, for this. Also, Gupta and Ketan, both the regional council members, doing a fantastic work of putting pictures together, and Rajesh,
thank you, Atul bhai.
This is a very apt subject, Murtuza, Ketan, everybody. I think please keep it glued. This is also very close to chartered accountants' heart. Yes, Rajesh, to you. Thank you.
Thank you, Anil bhai. I'll request CA Rajesh Shah, to propose a very well-deserved vote of thanks to all the panelists and even moderator Rajesh bhai, please, over to you.
Rajesh bhai, you're on mute.
I think that's still not coming up, Rajesh.
Fair. If Rajesh is having any technical issue,
राजेश सर आपका माइक म्यूट है,
केतन भाई आप ले लो।
राजेश सर माइक ऑन करिए।
Yes, sir.
सर बोलिए।
Now audible?
Yeah.
Problem in your ear.
They unmuted me, so that is why I cannot. As a so do bank makes money? Yes. Can and wallets and UPI are new banking operation? Yes, definitely. Fee-based income will going to increase. Yes, Jinand rightly said. PSB and private sector comparison has always be there. Private sector has to cater to the society. PSB bank is for the shareholders. Asset base, cash flow, process financing. Yes, all these things going to happen in the future. We need banks. Yes, we need banks. But how it will be physical or digitally? Definitely, we have to see the future with network and connectivity and whatnot. Fintech is a good opportunity. Yes, Jinad, Alibaba has proved it in China, so definitely it will be there. Cyber security is must. Blockchain technology definitely will going to come in the future. And rightly said, a bank will be a new infrastructure company. There will be an educated and uneducated customers. Post office is going core banking. NPA will going to reduce. Will definitely controlled with the regulators. And cyber security will going to happen in the future and will be taken care of, and people will be educated. So fantastic moderation by Anil bhai. Definitely, it is extraordinary session by you, Rajneesh sir, Atul sir, Jinad bhai, Pramod bhai, Gupta ji. Definitely, it is a excellent answer from you, and we thoroughly enjoyed this 1.5 year of this moderation. And on behalf of WRC and from all the members are here, I am giving a hearty vote of thanks to you. Thank you very much.
Thank you.
Thank you all.
Thank you.
Thank you.
Thank you. Thank you.
Thank you. Bye.
Thank you, everybody. Thank you so much.
Bye.
Bye.
Bye.